following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Good morning, everybody. Welcome to NinjaTrader Live. Happy Monday. My name is Jim Cagnina. It is March 25th, 2024. Almost done with the first quarter. Joining me live from Long Island, New York, the incomparable Tom Schneider, CMT. Good morning, Tom.
Well, good morning, Jim. How you doing today?
Pretty good, man. I love the new background.
Oh, thanks. Yeah, I spent all weekend building the bookshelves, filling it with books and other stuff. Yeah, it's a fun weekend, but also having the basketball in the background, that kind of helped as well.
Yeah, there was a lot of that. There's a lot of sport, a lot of NCAA championships. I had the wrestling, so I had that going for me. But good job. Looks great.
Thank you. Thank you. I just have to say my wife was waiting for her layover in Baltimore, and what do they have on the TV screens at the restaurant she was in? The NCAA wrestling championship or the tournament. So she was not too thrilled with that.
Oh, see, that's perfect for me. It was a lot of fun. It was a lot of fun, but it's over now. It's over now. I know our. How's your basketball bracket sheet going?
So I've got 6 of the Elite 8. 6 of my teams can make it to the Elite 8, so that's good. I think. Doing okay, doing fine. How about you?
So in our little internal competition, I'm in 65th place.
Ah, yes.
Not very good. Not very good. Yeah. Well, let's go ahead. We got a lot of stuff going on this week. We had FOMC last week, a lot of central bank activity last week. We had some commitment of traders reports that I thought were kind of interesting that came out Friday afternoon. I was up Sunday checking them out. So let's take a peek at some of those.
Sure. That sounds great.
All right. So on my screen here, I have NASDAQ. And the way I have it set, this is a daily chart. I could change it to a weekly chart pretty easily. But the way I have it set up is it's just a Japanese candle, right? And then I have the commercials, right? The hedgers, the commercial net position, right? And at the bottom, I have open interest. So what I'm looking at is what are the commercials doing? And then number one, and then number two, how does the open interest change? And a lot of times open interest doesn't change, but in this particular case, I think we had a pretty big drop off in open interest in the NASDAQ, where we went from a state of about 331,000 open positions all the way down to 250,000. That was a substantive jump down. At the same time, you'll see the hedgers are buying, right? The commercials are buying, right? They're short. They're not short, but now they're less net short, right? They're less net short. Yeah, we had a little bit of a hiccup last week, but is this potentially signaling contemplating a top or not? I'm not sure.
Right, and that's the open positions that you have on the top. You would expect it to move somewhat in price, but there might be some divergence happening here. And there's a week delay, right? So the number we see currently reflects the previous week.
Correct. So the minus 17,526 net, the net short position reflects reportable data as of last Tuesday, end of day. So right. It's not quite a week delayed, but it is delayed. But again, these are commercials that they're not like day trading, right? So they're accumulating. If you just kind of look at the upper blue dashed line, they're becoming less short, right? Less short. and we'll see if it continues or not.
That's a great chart.
Yeah. So anyway, I thought that was kind of interesting for the Nasdaq. You know, it's one thing we don't want to do obviously is try to predict the top, right? We're saying, well, the top is in. Look at the Commitment of Traders report. Look at the chart. Double top. We're not going any higher. That's a really difficult value proposition. But this gives us some really good clues on what the commercials are doing. And it's clear and evident to me over the last month or so that they're peeling off. They're peeling off their short positions.
Right, which reflects their opinion about this market being maybe a little more bullish than some of the technicals should be showing, right? We looked at the divergence in the momentum indicators, and this market doesn't care about that divergence. It still keeps going up.
Right. But if the commercials are hedging, right, the commercials are right. So the commercials are hedging. These aren't the large speculators. These aren't, the big institutions that are speculating. They're doing the opposite, right? So when they're removing these positions, then they're less concerned about continuation on the upside. Does that make sense?
Yeah.
All right, let's keep moving here. A couple more of them I wanted to show real quickly, Tom. Let's see. We're going to go to gold next. Let me pull up my gold. Click on that guy. Move this guy over here. We'll get this data in here for that particular market. Get a daily chart here on gold, Tom. And we could talk about the candle formation also on this. This is a different workbook, so I don't have a lot of stuff up here, but this is kind of an interesting picture on gold. Commercials increased their short positions and are net short, right? Open interest surged. Look at the open interest, 412 all the way up to 535. These are positions not only that the commercials are putting on, but everybody's putting on, right? So everybody's getting involved in this game here from whatever their position is. It doesn't matter if it's long or short. That's open interest.
And that open interest could you liken that to noise, right? The louder, the more open interest, the louder it might be, the more interest there is in this market. Market might be flowing in or out. We don't know the direction with open interest, but we know that there's intensity there, right?
Right. This is commitment, right? These are traders' commitments. That's hence the report of committed traders. These are traders adding 4 months in a row, or 4 weeks in a row to a position. And then the commercials now are becoming more short, right? The commercials are becoming more short, which means they expect the gold to rally. That makes sense.
Yeah.
And we could draw, I could draw rectangles on this chart. This is the great thing about the NinjaTrader software, Tom. We got rectangles galore. Nice solid base right here, right? A lot of nice area support. And on the upside, we're going to complete the hamburger bun, Tom.
Yeah, it seems to be trapped in that area for, what is it, two weeks now after that big run up. And, the question is, which side does it break out of? Nothing helping me today. Inside bar, well, it's not an inside bar, right? It's a harami, which is opposite direction, but smaller body candle. So leaning a little bit bullish, from a daily standpoint.
Yeah, and I'm bullish overall here. But explain it to us what a harami is.
So harami is an opposite colored candle. So you had a big move down on Friday.
Yep.
And then essentially, when you open up higher than the close, but you can't quite overtake the previous candle. So it's kind of the start of maybe an opposite trend. Although these trends have been very short within this sandwich or this hamburger bun. So it just could detail the start of a turnaround. It's not very convicted, though.
I see. All right. So again, I think we have consensus there. Let's move over to the, let's see, that was gold. Let's go to crude oil. I'm not going to I don't have a lot of these, Tom. I just wanted to get a few of the ones that kind of stuck out at me. So crude oil increased their short positions and are more net short, open interest unchanged. So this is a case where, the open interest is the same, and open interest are positions that are open, basically.
Right.
Unchanged for pretty much for a while here. It's kind of sideways here. Not anything to talk about. And let me hit my F button on the left-hand side, and you could see a continuous adding on to shorts, adding on to shorts, adding on to shorts, adding on to shorts. Commercials are anticipating a bull run here.
Yeah. And it's, the chart reflects that. Your uptrend there has higher peak lows, kind of a consistent high situation, right? Not a lot of cycling there. It just kind of moves up, moves up. So yeah, it looks pretty bullish here. Although today, again, we had our big news last week. What is it waiting for today? There might be some news this week that might move this market.
Yeah, there was an interesting. Oh, we went out of order again, Tom. Sorry about that.
That's okay. That's okay.
Oh,
That's okay.
All right, we're gonna fix this. OPEC delegates see no need to propose policy changes next week. That was interesting.
Right. And I think it goes back to the message they've been giving. They're happy with the stability of prices where they are now. Okay, great.
Yeah.
I don't expect a lot of movement when they say things like that, but anything can happen, right? It just takes one or two OPEC countries to say, wait a minute, I disagree, and then they do something and the price moves.
Yeah, for sure. So let's go. Let's talk about the economic releases we're up against today. There's a whole bunch of stuff here, including stuff that's already happened.
Right. So yeah, normally Mondays are pretty quiet, but I think this shortened holiday week has kind of moved things. Plus, we have now speakers speaking again. It's Speaker Palooza coming or Fed Palooza coming. Starting off with Raphael Bostic, 8:25 this morning. He was speaking. He's probably still speaking now. 8:30, we had the Chicago Fed National Activity Index. And I didn't see the result of those, Jim. I'm trying to see if we have those.
Yeah, I have that right now. So that came in at actual 0.05.
Right.
Forecast was minus 0.34, so it was a beat. And then previous was minus 0.3. So I call that a double beat.
Right. It's ticking in the right direction. It's positive again. So that's good news. And that's like 85 different economic indicators that they roll up into one number. So very interesting number coming out of Chicago. 10 a.m. we have new home sales from the U.S. Census Bureau. Dallas Fed manufacturing survey is at 10:30, and that's the first of like 3 or 4 different manufacturing surveys that come out this week. They might call them the index, they might call them a survey, but 10:30 a.m. you want to watch out for that. Export inspections, that's a usual USDA weekly number. We also have the 3-month and 6-month bill auctions. I think those are normally Tuesday. I could be wrong, but they might have been pushed up a day. 2-year note auction at 1 o'clock. That might be interesting just because it's reflective of the shorter end rather than the longer end of the curve. And these 2, 5, 10, 30 note auctions generally get a little bit of press. So watch out for that at 1 o'clock. And then cold storage, 3 o'clock, USDA kind of your usual weekly USDA numbers. So all of that is say it's a big news day where normally we see like 1 or 2 pieces of news and we carry on about our day.
Yeah, so we're back to the regular news cycle, right? The quiet period is over. Like you mentioned, Fed Palooza is here again. Everybody's going to be talking, right? And we have regular numbers from economic release point of view.
And Jim, what's crazy about, I mentioned Fed Palooza and there are some other speakers, but Friday the markets are closed. Stock market is closed, shortened hours, Easter weekend, and Chair Powell is speaking Friday morning. What do we make of that? How do we deal with it? And it might be the afternoon. I might have misspoke. It might be let's see. Chair Powell might be speaking in the afternoon. So this is one of those things where it's like, what do we do with that information? He's going to speak. We can't really act upon it till Monday or Sunday night.
Yeah. Hopefully he's speaking about something other than policy. He might be. Sometimes they speak about, cyber currency, sometimes bank regulations. I don't know.
Right.
I think there might be an economic release on Friday too, which I can't remember which one.
PCE is coming out Friday.
Yeah.
Wholesale and retail inventories coming out Friday. maybe even durable goods. No, international trading goods is Friday. So you just think, what are they thinking at the Bureau of Economic Analysis? Why are they doing this? But that's what's, we can only go by what's on their website. It may change, but you never know.
Yeah, and it's very odd because it's a true CME holiday. When I say true, I believe there's that morning session isn't even happening for this
Oh,
holiday.
wow. Okay.
Right. For Good Friday. So, a lot of times you have a holiday, but you have that, nighttime session and that, shortened early morning session. I'll fact check that. But I think it's just, no, nothing's happening Friday at the CME group. So
Wow.
the warning obviously is be careful with your, don't get stuck in an open position you don't want Thursday night.
Right, for sure. Because that'll carry over a big weekend.
Yeah. Whew, any event. All right, let's go to the Euro FX. Here's my last, what I thought was a startling observation in the Commitment of Traders report. So the commercials are still net short. And you can see it up here. Then there are two different scales I have here, guys. And I did an overlay, right? I have the candle, and then I overlaid the commercials over that to kind of really give a little bit of a visual oomph. Am I getting a visual oomph, Tom?
Yeah, and I think that you hit on it with the visual. You just got to be real careful when you overlay two lines. What you're generally looking at is the behavior of the line, not the values of the line, right? Because I don't know if that change in the commitment of traders is a 10% move, 50% move, a 1% move, right? It's just what is the behavior, and that's why I like the overlay.
Right. So there was a jump up. They peeled off shorts, right? The commercials peeled off their shorts, meaning they're less bullish. And then at the bottom here, you could see open interest just drop by a large amount, right? This is almost 10%, 718,000 down to 656,000. So again, this makes me a little bit neutral on this particular currency pair. And we could, now we could analyze the actual candle themselves, and you tell me what you think here with that.
Yeah, I mean, forgetting the commitment of traders, if I just look at the candles, that area of resistance sticks out of me pretty good, right? I mean, it's almost like you could see there are 3 wicks into that area. You could call it maybe a triple test of that level. The initial spike in, and then a little bit of a pullback, test again, and a bigger pullback, test again, failure, and then it's just came down hard. So I don't think we'll be trading up there for a while, comparatively, like, maybe a week, maybe more. But then you also have kind of this area of support, which we are might have turned around at. I mean, if you look left, which we like to do sometimes, you'll see, yeah, all the times we traded in that area of 108. What is that? 108.40? Am I seeing that right?
Well, my crosshairs now is at 108, is at 81.
Right.
So 81 even.
81, right. So up to 84 maybe. Just
up in there.
yeah,
I'll get my rectangle. Yeah, there we go.
Yeah, we've traded through that so many times, right? Like if you look left, we traded through it so many times. So to me, it's that might be a natural area of support. I don't know. It's fairly range bound for the last 3 weeks, and maybe we're just testing the bottom, but don't be surprised if it comes back down through your rectangle, because we've traded there so many times before.
Now we might be through the piercing line. Maybe not. Maybe we're right at the piercing line of the previous candle here, daily candle. We're about halfway up through that red candle. Is that something we should really take note of?
I just think the piercing line is kind of like it isn't a breakout line by any means, but you just feel better about a reversal when you get through that halfway point. If we reverse a little bit,
Got it.
maybe there's a better chance we continue that downtrend. But if we get through that halfway point, yeah, let's pay attention, see if this trend reversal is true. One thing we don't have on here, because this is a commitment of traders report chart, is the volume. I'd also want to look at the volume and see, is this reversal, like, are people coming in on this volume? Do they like this reversal? Is there a lot of volume, or is it just like, kind of average or even below average? The volume here really helps me understand, is this a true reversal?
Yeah. All right. Well, we'll get to that when we do a little bit of a deeper dive in the next segment. I'm going to go ahead and pop in the E-mini S&P real quick. Just take a peek. And let's get this data in here. There we go. Well, I mean, let's just look at the trend first. I mean, consolidation, rise, consolidation, rise, consolidation, rise. Now are we in a consolidation phase, Tom, or is this? I mean, this seems like a weak attempt at a retracement, to be honest with you.
It does, and it looks like every other retracement, for the past, 3 or 4. It just, these retracements don't last long. They don't really retrace, well, they've actually been retracing back down to the previous level. So if you look at that's, we retrace back down to that area right there. Now you have do you see the top of that consolidation area? You've just marked the bottom of it, right?
Yeah.
We could retrace back to here and I'd feel fine about still being bullish, right? Because that's what we've done. That's what we've done so many times. The previous retracement, those 3 red bars in this hamburger bun, where did they retrace to? They retraced to the breakout area and then took off again. So if we retrace to the bottom of this latest big green candle, fine. Still bull trend in place, might be a good opportunity. But you're wondering, is this it? Right? Is this the point where we retrace further, we break that level? But it hasn't happened. And I don't know what's changed to force that to behavior to change, right? We have a little more clarity on when we're going to cut, how many times we're going to cut. Clarity to me means a little bit more bullishness. So maybe we don't even retrace back down to that previous bottom of the green candle and we just turn around.
Yeah, it's hard to even draw a fib line here because it's just such a small amount of data. But this old area of resistance, this top rectangle, I just extended it over again. And this is where you really see how that breakout happened, right? It broke out. Now this could be the floor for the next consolidation period. We don't know, but this is what the pattern has been for the last, several months.
Yeah. And again, I think that idea of having a little more clarity than we did before is only bullish.
Right. All right. Well, let's keep moving. I don't know that the commitment at the commercials haven't done much. We lost a little bit of we got a little bit less long here. So they're hedging themselves a little bit less long here. I don't know how material that is. We had open interest dropped quite a bit actually. So people might be scaling out of positions also. So that could suggest a pause or a rebalance, right? Rebalance would be, all right, I don't want to be long anymore. I want to be neutral, and then I want to get long again on a reversal. So,
Jim, one other thing that goes through my mind is if we were to have all 4 stock index futures that we look at up here, because maybe there's a rotation going on as well, right? You don't see a huge move down, but you do see a move down. So maybe there's a move up in the Russell or a move up in the NASDAQ, that kind of thing. So this could also be a little bit of rotation in and out of the different sector. I shouldn't say sector based, different stock index futures that reflect different sectors of the economy.
Well, you asked, you shall receive. Here's the Russell. Russell's got a little baby bar today. Little baby bar in the Russell so far.
Yep.
So I'm not sure how much rotation's going in right now, but that's a good point. It is up on the day. So that's something. Trend is still pretty positive here in the Russell. Nice area of resistance up here, approximately 21.25.5. Nice area of support down here. This is kind of similar to the other stock index future we just looked at. Let's go ahead and put that rectangle in really fast, Tom.
Jim, one thing that I see that's a little different is the time that the Russell retraces pulls back, retraces, extends, pulls back, retraces, extends. We saw that in a pretty systematic 5 or 6 bar pattern in the E-mini S&P. Here, it's not, right? So you go back to the beginning of February where you have those three white soldiers, those 3 big green candles, and the pullback was immediate. You see that? Yeah.
Yeah.
Advance, pull back 1 bar, 2 bars advance, pull back 4 bars, and then it took a long time comparatively to get back to where we are, extend a little bit, pull back a 6 bar. So it's not consistent. It's not really consistent like the E-mini, which is why I think it's hard to trade the Russell. It's not as like consistent. You don't want to say predictable because that gets you into trouble, but it just trades differently.
More risk on. There we go. All right, so let's go ahead. We're going to take a really quick break and get right into the opening range.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
All right, we are back. NinjaTrader Live, Jim Cagnina, alongside Tom Schneider. Where do we go from here, Tom? Opening range is going to happen in a couple of minutes here. Let's kind of look at a 10-minute chart just to see what happened overnight.
Sounds good. Maybe, Jim, while you're getting that up, I'm going to give a special shout out. Jen P. and Patricia M. First ones in the chat in their respective places. In the NinjaTrader chat room, in the YouTube chat room, you get a special shout out for being the first ones in. Thank you so much for being a part of the show. And by the way, if you want to join the chat too, you can do that. If you're watching on YouTube, you should see the chat there. Also, if you're looking for the chat at NinjaTrader, we have it at ninjatrader.com/events. And you can put a handle in there. Press the play button first, put the handle in there, and then ask us questions, give us comments, trade ideas, whatever it is. What'd you do this weekend? Is your bracket busted like everybody else's, or you have a shot? Let us know. But come and join the chat. Thanks again to Patricia M and Jen P for being the first ones.
Absolutely. I second the motion. Thanks for being here, guys. Hopefully everybody had a great weekend. Even the S&P chart right now, this is a 10-minute candle. I know I don't have a lot of stuff on it yet. Don't worry, I'll get stuff on it. We've been trading below VWAP most of the session, with minor exception here between, I don't know, at the end of the European Open. We had some kind of sideways consolidation right around the VWAP. We were trading below previous sessions lows. That's the red dotted line. That's the second thing that I noted that are kind of important. And then we're trading between S1 and S2 now on the pivot time, with the point of control right in the middle.
Right, and that pivot held that S2 traded right down there. I mean, that's the amazing thing about these pivots is you want to think where the market could go. Pivots could be a guide sometimes, and we saw a little bit of congestion at S1. Right, when we got there, we just didn't go right through it. We just didn't go right back the other way. We traded around it. Those are orders being chewed up that traders know about S1, and they're putting it in there. Looking for places to sell, it looks like. I mean, it's a tough one, right? Because we saw what do we call it? A harami? Was it a harami on this market, I think? Um,
Yep.
which generally is a little bit of a turnaround, could be bullish, but here we are trading toward the lows. Actually, now it's a red candle. So, maybe it wasn't this market, but
Let's double check. Let's double check. We'll just go to
yeah,
the daily.
I
I
might
know we
be
cover so many
misremembering.
markets. It's like easy to.
Yeah, no, right. E-mini wasn't. Yeah, I'm looking for places to sell. I'm not looking for places to buy. And, we have that resistance area on the daily. We've got VWAP on the intraday. That might be your place if we get back up there.
Yeah. Short-term fib line on the daily, 37.5 is in play right now. We're only about 12, 13 handles away from that, where my crosshairs is right now. This is looking bearish, Tom.
Yeah, looking pretty bearish. Volume, like you said, making new point of control with the pre-market. That just tells me this was thinly traded. Right now we're trading on the E-mini about 166,000 contracts. So not a huge volume day yet.
No, it's not. And I think and this is based on my experience a little bit. I feel like you have that spring break period that goes all the way really through Easter, depending on what kind of school you go to. And you see that, it's vacation time, right? Especially if you have kids. So that's part of it. We have a holiday Friday or an off day Friday. So I'm not surprised it's low volume today, as it was pretty much most of last week.
Yeah, yeah. My son is on break next week. He's got a whole week off next week.
Okay. Well, yeah. So that's a great point,
So,
because I think my son was 2 weeks ago. So it's like that whole month, right? You just don't know. And if you're in Catholic school, it's later than it is in other schools. So
right.
anyway, this is building up to be a classic retracement trade, I think. I mean, we have a really serious point of control we're trading at right now. It's the most dominant candle, and we're going to talk about this in detail in like a half an hour. We're going to talk about volume profile. We're going to talk about what these histogram bars mean. But right now, there's a lot of volume accumulating right here, right where we're at. We're not breaking out. We're not breaking down. We're not trending anywhere. It's sideways. Now, eventually, I feel like some of this volume might fill in some of the smaller histogram bars, but we're not there yet.
Yeah, what's interesting, Jim, is we had this consolidation for the last hour and a half, and there were buyers coming in looking at the cumulative delta study. So it's not surprising right now that it might be breaking out. That upward pressure is just pushing on that that resistance level, that consolidation area, and now we're making a little bit of attempt at going to VWAP.
Right. And that's where the retracement is. Now, the problem we always face is, we have another economic release. We have new home sales by the U.S. Census Bureau coming up at 10 o'clock. So again, you got to decide, is that a number you're willing to trade in front of or not? I know it's a long time away. It's a long time away still. We still have almost a half an hour. So we'll see what kind of retracement we get up here, Tom. S1 hold is a possibility, right?
That is certainly. And it, like I said, it consolidated a little bit around there, traded around there before. A little bit of a volume node there. Maybe we'll see some halting action there, but could easily break out, try to get up to VWAP. What's interesting are the VWAP bands are somewhat constricting, not too bad, but the turn down on the VWAP certainly pulling those upper bands down and pulling the lower ones down too.
Yeah, sorry about that. My screen so second upper standard deviation band, first upper standard deviation band, VWAP itself, first lower standard deviation band, that's that blue, and then that other blue line here is the second lower standard deviation band. So we're trading now time between VWAP and that first lower standard deviation band on the opening range. Buyers are coming in right now.
Yeah, and sometimes we see that move past VWAP to the next standard deviation band. but it wasn't really a bounce off that lower band. But it doesn't matter. It's opening range. We've got a whole bunch of new participants coming in and moving this market.
Right. So, and how many times have we seen the first 10-minute candle, giant green candle, second 10-minute candle, giant red candle?
The xylophone pattern, as I like to say.
Yeah. So Tom, who's with us here today? We have folks here on Monday morning. I applaud you for being here.
Yeah, we have a great crew. Cos P is here. R. Crawford, Theo G, W. Ray, Turtle, Stephen Rios, Paulie H, Mom and Dad are here, Jim. Good morning. On the range, Anissa, good afternoon. Chris Kaggs is here. I wonder who that is. Jeff R, At Home ATM, RT, Avi, JK, Raleigh, For Money is back. Good morning. Newbie S is here. Ames, Yovan, Foggy Cape, Kelvin J. Now I'm going to try to say this name, Jim. Anna Lilia C. Tony Lyons, McRangers. Carlos B is here. Hope you're all having a great morning, afternoon, day, trading day. We thank you for coming to the chat.
Appreciate everybody being here for sure. Good morning, Mom. Glad to see you're up and early, bright and early, along with Chris Kaggs. Tom, so someone said the Russell's breaking out. Jeff R said the Russell's breaking out, so I pivoted over to a Russell 2000 chart, and we are rocketing past the pivot.
Yeah, I mean, amazing. This market is up over 0.5%, where all of the other three are down. Here's where intraday guides might come into play, but also your daily guides might come into play as well. But let's look at the intraday first. You're going through pivot. Next area up top might be R1. It's only 10 handles away, but 10 handles on the Russell certainly is a bigger deal than 10 handles on the E-mini or the NASDAQ.
It's like 5% right there. How'd you like my math? It's like 5% to go 10 handles.
0.5%. I'll do one better. Yeah.
Yeah, that's what I meant.
Yeah, exactly.
All
right.
All right.
500s. No, 5/10. Yes, 5/10.
Oh my goodness.
Still, whatever it is on this chart, it looks pretty amazing, right? So how could we have known? I don't know. How could we have known that it was going to do that? Doesn't matter. We're traders. We react.
Yeah. So the daily, yeah, we're getting close to the xylophone pattern, Tom. We're actually almost like a lopsided hot dog bun pattern, but not quite. I'm going to go ahead and move this rectangle up here. I don't know what to make of this, Tom. I think I need to have some more conviction here on the upside before I'm ready to be like, all right, we're going to be making new highs here not too long.
Yeah, and I think that hot dog pattern you mentioned would be a continuation pattern of the uptrend. It's just complete rejection of that Friday move, that taking out the top of that or getting close to the top of that candle. Right now we're piercing this candle, right? We're just getting about halfway, and that's all within the last, I don't know, 7 minutes, maybe a little more than that. But yeah, I think that area, you've got a couple potential areas of resistance there, well marked. So I'm not looking to sell this market, but give us some evidence that we've hit the top of the day, and it's just going to be a piercing day, and maybe it reverts, but looking.
I'm going to throw out a theory. Theory, Tom.
I love it.
So we got Tuesday, Wednesday, Thursday, a lot of buying going on in those 3 days. Friday, don't want to have an open position. Maybe I'm going to take some profits. And now Monday, let's go back to the way things were.
Right. And that, that is continuing Wednesday's activity, right? We got some better news we've got clearer news about interest rates, Russell being more affected by interest rates. The good news for the Russell is we're going to start cutting at some point. I don't know why that's changed, but we knew that. But maybe the market knows a little bit more when that's going to happen, and that's why we see this big pullback. I like your theory a lot. That's great.
We'll find out. Anyway, Jeff, you are right on point here. That was a great breakout trade, and just kind of, I'm going to highlight the where that breakout occurred with a long-term rectangle, right? Sideways bound, sideways bound, sideways bound. Boom! Right before the opening range, we started breaking out, and then confirmation candle, big time on this current contemporary candle that we're seeing right here. So that's where if you were a breakout trader, and again, I'm not. Tom's a lot better at it than me, but this would be where you would try to like enter, after you had this breakout on the upside, or even during this particular candle, also around, I don't know, 28.98, something like that.
This might be a good chart to revisit when we talk about volume profile, Jim.
Yeah.
Because I just see, a tale of two cities right here, right? Pre-market, open, all of that. By the way, Jim, Stacy F and Winter PD are here, and it's the first time, or maybe not the first time, but Winter PD says new to the platform. So stick around. We'd love to, tell you a little bit more about the platform as we do during the shows. And at the 10 a.m. Segment, which is 10 a.m. Eastern time, Jim and I will be going over volume profile a little bit more in depth. So
absolutely. But thank you for being here, Winter PD and Stacy F. Appreciate you guys. So Tom, I just pivoted back to the E-mini S&P, and we're just still range bound. I mean, we are very, we wicked through. Now, this is that wick through we always look for, but we didn't get to VWAP yet, right? We didn't wick through volume weighted average price. We didn't get to the 62.5 harmonic. We bounced off, right? And S1's holding right now. Sellers are coming in right now. Nice point of control is established at approximately 52.77.5.
How close did we get to VWAP? I mean, was it right there? Was it very?
Here, I'm gonna expand this chart up a little bit. I mean, Tom, we're talking
2 clicks,
one or two ticks,
right?
One or two ticks right there. It was pretty close. So, but VWAP is held right now. We have an equal and opposite candle brewing with a lower low. This is again looking pretty bearish right now. Going into, I wouldn't be surprised if we end up talking about a breakout trade below S2. To be honest with you, Tom.
So what's interesting is with this candle, let's talk about the previous candle. That first candle, that's when the cumulative delta study started showing weakness. And with this current candle, it went from a positive accumulation to negative in a big red candle. So the weakness I think is showing through in that cumulative delta study. Could we break through that support area? Possibly. That would be my thought, but we thought, we're looking for places to sell, not buy. Where are those? We'll talk about that after the 10 o'clock, after the news at 10 o'clock.
Yeah. And right now I'm really looking at, I mean, this feels so bearish for me. I mean, this retracement was feeble. We got all, we wicked through, but, we didn't close above the 37.5 harmonic. I mean, we just didn't ever since this low was in. And I have my low anchored here at 8 o'clock this morning, right by the S2. So this is a weak retracement. Volume wise, where we at? 230,000. I mean, that's nothing to, we're not going to break any records today.
Right.
So again, I mean, I'm still looking at selling the top of the range, buying the bottom of the range, but I'd rather sell the top of the range than buy the bottom of because again, I see this, I don't know. Is it a double bottom, Tom? Would you characterize that or no?
I would call it a double bottom. I'd want to see a little more evidence of the second one. Are you talking about that congestion area, that consolidation area at the beginning, and then now we're testing it again? Yeah, I would say I'd want to see a little bit of a bounce off to say that was a double bottom. Now we're just, because if we break through this is just breaking through prior support. That's all it is.
Right. And then we have another S number, don't we? S3. Whoa, look at that.
Somewhere. It's somewhere.
That's pretty far.
Yeah.
That's 4250 kind of. So, it's not unreasonable. It's only 26 handles away. It's actually 28 handles away, but not unreasonable.
Yeah, and if you look at the average true range, like I like to do, the question is, where could the market go? If we think it's going to break down, where could it go? Right? Because if we want to go short, the entry is a part of that equation. But once you're short, where could it go? And the average true range for the E-mini is 49 handles, 49 index points. So what we do is we go to the top of the range. You find that high, which happened somewhere during the session, probably overnight, right? I think you've got that there. 95, 52.95. So let's round it up to 50 is the average rate. So it's easy to do the calculation. You're looking at 52.45. Well,
Right. And that's below. I got to just
Where
keep
is-
going.
yeah,
Where is it? It's down by S3.
it's down by S3, right?
Wait, what did you say it was, Tim?
52, technically it's 52.46, but I rounded it down.
Oh, all right. Oh, let's make it technical. So right below, look at that. This is like winter wonderland down here.
Right.
I don't know.
So,
Nothing's going. Yeah.
so when Jim first pulled up that S3, you're thinking, wow, there's a lot of white space there, right? But from an average true range point of view, it's in play.
Yeah.
It doesn't look like it now, but it could happen. And this is partially because we're just trading in such a narrow range today. The chart, the way it fills up the screen, it makes it look like, wow, this is the range today, but that range can expand. We know that. And where it could expand to? Well, average true range is not a bad guide.
Nope. Again, this is a dominant candle right now. Benchmark candle. If we were to close here, I know this candle's not expired yet, but we're getting close to that expiration. So it's if it remains that big, it could be, here's a benchmark, here's a benchmark, here's a benchmark. The big candles so far, ever since the European Open, after the European Open, has been red.
And that just shows, the willingness of participants to sell more than buy.
Yeah. So, and I'm not convinced this area support's going to hold right here, Tom. I do feel like this is going to be moving down. We'll come back to this one. Let's go ahead and just check out. Let's see what we got. Let's see what's on the move. Dollar's weak against all the currency pairs. Currency pairs are stronger versus the US dollar this morning. Treasuries are all off a little bit, not a lot of it. Gold, 18 bananas, 1870. Let's go to that one. It's a big move up on gold.
Well, it made a new high, right? Of the session, new session high. It's up almost 1%. Not bad for gold, right? That's $2 roughly, a little bit less, right? A little bit less than $2. So, trying to find gold on my chart. I can't find it. There it is.
Okay, it's kind of like it's this VWAP makes the way I have the volume weighted average price and its standard deviations colored. It looks like a flag kind of waving in the wind.
There you go. I like it. Yeah, it does. Right. It does a big move up in the overnight. Big dominant candle. We can't get around that. We tried to compete with it at 9:30. It couldn't come close, but it did reverse this retracement that we saw going into the stock market open. And we're trading above value now. Point of control is at Friday's close. Point of control is, so what's interesting is this market made a big move up during the Asian session. Retrace, sellers came in, brought this back down, all the way back down to the close. And that was all kind of before or reaching into the European Open. And Friday's close was a good hold, 21.66 roughly. And now we're just pushing back up. So yeah, maybe it's the weakening of the dollar that's doing this.
Well, we'll see. I mean, this is VWAP. Yeah, we tried to trade below VWAP most, a good chunk of the overnight. And then we finally broke through around 720 and created a lot of separation between volume weighted average price and price right now. I have a harmonic fib up here as well. And I'm looking for a nice retracement to try to get long here. I want to validate that with the daily chart though in a second, but I'm just drawing my rectangle right there. And let's go ahead and check that daily. Here's the daily. Yeah, so daily, wow, we have an inside bar time. I forgot about that.
That's the one we were talking about. So yeah, this is interesting because again, it's slightly bullish, right? The candle itself is bullish. The comparison to the previous candle, it kind of rejects the lows of the candle, but we haven't taken out the highs of Friday. So that's why I say it's slightly bullish. If we take it out, right, what would be really bullish is if we opened lower and then closed higher. That's an engulfing, a bullish engulfing. We don't have that. We kind of have the opposite, but it's still slightly bullish. So question is, are we looking? I'd be more inclined to look for a retracement on the intraday and go long than do a breakout trade.
All right, I like it. Let's go back to that 10-minute chart just to understand the possibilities here. So a nice volume node right here. This is interesting, Tom. And we're going to talk about this in detail, but there's a lot of price happiness right around 2176, right by that first standard deviation VWAP band and slightly above that 37.5. What would be interesting to get a wick below that 37.5, right? Because again, remember, price happiness, this might attract volume. It might attract price. It could even become the official point of control is instead of the overnight low down here. So from a retracement point of view, Tom, I guess the question is, how aggressive do you want to be? Do you want to wait for the VWAP to be challenged to get long, or do you want to try to get long sooner than that and then use this area of support that identified at 2174 for stop purposes?
Yeah, I kind of like that. We'll look at it a little closer, but what I see is when we retrace, we don't retrace all the way back down to the previous, the start of the previous bullish move. So I think that area right there would be, it'd be ideal, but we might not get that retracement. We might have to go long before that. So I like that idea around the 37.5% area. And use that area of support or even VWAP as a stop. But that's what that's what I'm thinking, because this market just keeps advancing. I think we're slightly bullish. Let's kind of act like that.
All right, let's do it. So approximately 2176. Well, that's where I'm trying to enter, right? Wait for a retracement back to that 37.5. See if we can get any drive back up to my target wick. My target wick's way up here, 2182. Remember, you could do this in a micro gold contract. So mind how, your leverage here. Leverage is an account killer sometimes. So be careful with that. And now we got my area support. 50%. And then we have that VWAP way down here. So Tom, I don't want to put too much risk on this trade, but if we were at approximately 72, right below VWAP, that's about a $400 per contract risk right there. So this is a big risk, but we're shooting for that target wick way up high.
Yeah, and if you wanted, if you wanted to lessen your risk, I would put it at the bottom of your rectangle, just because I think if we're going to retrace that far, then it's probably this pattern we see on the uptrend isn't holding, right? It isn't going to continue, or it isn't continuing. So yeah, I would probably lessen my risk.
You don't have to tell me twice. I moved it up. So yeah, so we're less than $300 now. So again, with a micro, it's going to be $30, or if you do two micros, $60. So it's multiplicative math. It's easy to figure. But all right, we'll keep it going. We'll keep that going. That's first trade of the day, Tom. I know it's before 10 o'clock. I'm not expecting the 10 o'clock releases to be formidable. Let's put it that way.
Right, especially in these other markets, right? It might affect stock index futures, maybe a little. But not, I don't think gold will be affected by that. I don't think gold traders are really paying attention to it too much. My thought.
Yeah, it'd be interesting to see the correlation between the two. I don't have that correlation chart handy, so we'll take a look at it another time. But let's go back to the 10-minute on the E-mini S&P. Same thing in reverse, Tom. Look at that. Yeah. We wick through VWAP. Yeah. Look, oh my gosh, right. Look at that trade. It's beautiful.
Well, let's take a look at the candles, right? I mean, for the most part, you can see this is in an uptrend. So, since the low of the session.
Yeah.
It's not perfect. It isn't every bar is higher, in the highs and lows. And the previous bar was a spoiler of sorts, right? It didn't get quite as high and it got lower than the previous bar. So that seems to me a little bit of rejection of prices. This could just be a boxing match, right? One side takes a hit, then it throws a punch. The next side takes that hit, then it throws a punch. So, the question is who's going to advance? And it looks like bulls are advancing some more. What I would look at again is the cumulative delta and just see what's happening here. And it's kind of this reflecting price where we saw a big red candle on the cumulative delta on the previous bar. Right now we see a green candle. So buyers are coming in. This is that struggle.
And the bands are the standard deviation bands are tightening.
Yeah. Yeah. And that would happen as we trade near the VWAP. It just is a little more stability. If we're trading around the average price, it kind of smooths out. So this isn't indicative of a breakaway, a trending market, although the trend could be, this uptrend could hold for the rest of the day. We don't know.
Yeah, I don't know how. I don't think I have high hopes, Sam.
I don't. I would still be looking a little bit of places to sell, but
Yeah.
like I said, not a breakout on the downside.
But we have this competing point of control right here where we're trading right at 5280, 5281, something like that. If we keep trading up here, it's going to take over this point of control. But more importantly, I see this volume area filling in. So let me just make this a little bit better for everybody to see. I'm going to go ahead and draw my region highlight tool. A little bit of a volume weakness, right? This is exactly where we're trading right now. And we'll see again. I envision a scenario where we fill in here and connect the dots. Not sure, but that's a possibility. Oh, here we go again, up to VWAP. Test and volume weighted average price again. Would you do a breakout trade on the upside, Tim?
I'd be hard pressed to do that. I just see it. I just see VWAP being a factor here, and I think we're I think it's going to hold as resistance. It might close above it. It's done it before, but when it closed above it before, it stayed there for about a half hour and came back down. So patience. Yeah. I think it's patience.
Yeah, I mean the VIX is right now is trading at about 1344. So it's a low VIX. It's been a low VIX the last month, really. I mean, well, yeah, we peaked at over 15 one day, but I'm just looking at my chart on the right-hand side here, and it's been the sweet spot's between 14 and 13 on the VIX all day, every day.
Yeah.
So,
which is a bullish thing, right?
Well, it's not bearish.
It's not bearish.
Let me put it that way. I mean, we're tracking VIX at 39 or 35 and 30, and everyone's hair's on fire.
Right.
But yeah, it's calm. It's a calm marketplace. Still though, I mean, this is still kind of trying to fight up here. We're getting that volume accumulation that I was talking about. Slowly but surely, as we get to the end of the opening range, which is going to be pretty soon here, if not already, we're gonna, it's the volume smile is going to flatten out.
Right. Of course, barring any unknowns, you're right. It's 10 o'clock. We might see a little burst of volume if it were a significant economic report. We still might see it if it's a huge miss, but I don't foresee that. So, but prove me wrong, I think.
Yeah. I mean, if this bar doesn't close in my rectangle or above S1, it could be a really good signal to try to get short.
Yeah.
So not quite there yet. We got another minute and a half or so before the opening range is done. And volume wise, let's take a look at the volume. Volume wise, 278,000, kind of a ho-hum start so far, telling me there's not a lot of institutional involvement today. And I kind of add, I look at the ratio between the E-mini S&P volume and the micro NASDAQ volume. And when the micro NASDAQ volume is just crushing the volume in the E-mini S&P, and we
Right.
have small volume numbers, not a lot of institutional involvement.
Jim, can we take a look at crude on an intraday basis?
Yeah, for sure. I'm just going to click on CL right there.
Well,
Didn't we have a trade idea that we missed probably?
No, but maybe we're looking at one soon. I just wanted to point out, we're angling toward R2, right? Crude
Yeah.
getting a big lift. Crude trading around Friday's close, right? Again, nothing really moving the market, stability in OPEC, blah, blah, blah. So a little bit of an upswing here, but something happened, something changed the minds of the traders, and we got this big move up, dominant candle at the stock index, stock market open, and R2 is in play. So I just wanted to point that out. If you're trading crude, big breakout move here.
Yeah, once we started trading above previous session being Friday's highs, off to the races.
Yep.
So, all right, let's take a really quick break. We'll get right back to it.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Tom, housing is the thing to talk about this week. We just got a number, right?
We did our first one of, I think, 3 or 4 this week. We got U.S. New home sales. And so it was a miss in terms of forecasts. It was forecast to be about 675,000 new homes this month or last month. It was for February. Forecast was 675. The actual was 662. So a bit of a miss, not horrible. Previous was 661. So just slightly higher than the previous month. But the month over month change, I think, was a little bit of a different story. Forecast to be a 2.1% increase in new home sales. It was down 0.3. So, kind of a miss, but not a big miss. Nothing really to worry about. And I think the market doesn't really, react that way.
Yeah, well, I think Goolsbee this morning said the main puzzle with inflation is housing.
Yeah, which that's really surprising they're mentioning housing. I wouldn't have thought that. I thought something else, right? Maybe labor would be one of the things, but housing is on there according to Goolsbee, right? Austin Goolsbee, it's on their radar.
He's calling it a puzzle, not even a puzzle piece. It's a whole puzzle.
It's a whole puzzle. It's the main one. So if you have multiple puzzles going, I do not, but if you have multiple puzzles, it's the one you should be focusing on.
Yeah, for sure. All right, so let's talk about order flow volume profile. And this is one of the special features of the NinjaTrader software. It's pretty powerful. You can see it on my chart, the histogram bars on the left-hand side. But I want to show you the dome first. This is the NinjaTrader Super Dome, and this is probably the best, really the good way to start explaining volume profile. And you can see here, I have a price ladder, right? At this, every incremental, it's a ladder, right? So prices increment up by the smallest tick size. They scale down by the smallest tick size. You got bids and offers on the left and right. But I added a column here called volume, and it shows in histogram format, along with numerical numbers in there, how many contracts have traded at that particular price point over the session since we opened up last night at 6 o'clock. And you can see these volume distributions right here, tick for tick on a trading ladder.
And you know what? It's great. It's a great view. I like the way you've lined it up with your chart, because you can see that volume profile that you have on there that reflects the ladder, right? Which is a section of the trading. It's about 10 handles or so. You can look to the left on your chart and you can see it follows the same pattern because it is the same data.
Right. So the only reason I'm showing the dome just to explain it. Every single price point, you can see how much volume is traded. And I can scroll up, I can scroll down, and it gives me information of where traders find price happiness. Now let's kind of move over to the actual chart itself. And I have it formatted on the left-hand side of my screen, right? And each histogram bar, again, refers to price point, and it's dynamic, right? As we trade at a certain price, these histogram bars get bigger.
Yeah, for sure. The color coding is great. Sometimes you'll find in trending markets, you'll find the price trading away from that point of control, right? If this market were to suddenly decide we needed to be up at 5,300, right, well above where we are, that point of control would still be the point of control. It's where the most happiness is. But if we trade up there long enough, we'll see another distribution. But until then, this color coding on the distribution is the dark blue versus the light blue is really where a majority of the trading has happened. It's added up all the contracts that have traded. It's grouped them around that point of control to say, well, you know what? If we took all the contracts traded today, this blue area would be about 67, 70%. It's not precise. It does the best it can to fit, one standard deviation amount of volume in there, but it's always around that point of control. So sometimes you'll see kind of weird things happening where most of the value area is down at the bottom or down like now, or most of it's at the top. But that happens on days where we don't have a real nice bell curve shape. It's kind of broken up because market changes.
Yeah, and just let's get some terminology out of the way, right? We have this dark blue area here. It's called the value area, and as Tom pointed out, it's one standard deviation worth of volume, and it tracks it on a rolling basis going forward since the start of the session. Now we anchored it to the start of the session. You could anchor it to any segment you'd like. But for me personally, I like to see the volume throughout the whole day accumulate. Now that's the dark blue area. And you'll see a dotted line at the top of the dark blue area, right? That's kind of the transition point between the value area and then this light blue histogram bar section here. And that's called prices above value. Okay, makes sense. Prices are higher than the value area. Prices above value. So not a really creative name, but someone made it up. And then at the bottom, we see that another line here, dotted line at the bottom of the value area, and that's the transition between the value area and you guessed it, prices below value. So that's some basic terminology there, Tom.
Yeah, that's interesting when we think of value, right? Above value, below value. It's kind of binary, but really this is not that, right? When I think of something that's above value or it's priced at a valued price. No, this is really about where most of the trading has happened. And it really pulls your eyes to where, maybe not where the market is trading right now, but where most of the market has traded today.
Yeah. And this is kind of market profile on steroids, right? This is how I characterize volume profile, right? And so let me just kind of show you. So right now, if I'm going to highlight the value area right now and just kind of look at where we started trading. We started trading in that area after, let's see what time that is. Sorry, let me get my crosshairs back. Where'd it go? Here we go. We broke through right here, Tom, and we started trading here at 6 in the morning, right? All of this volume, there's no volume accumulated in my rectangle there since 6 in the morning. Then all of the volume, pre-market, opening range, post-opening range, all accumulated right there. So when I'm trading in the morning, pre-market or during the market, this is my focus. This is the more contemporary area of trading. And now we're trying to penetrate above, right? We're trying to cross back over now and drive up to prices above value. And so, questions, will that hold or not? I don't know if it's going to hold or not, but this point of control, the one histogram bar, that's the longest histogram bar on the chart, and it could move, it could change. That's where the most volume is, tends to act like a magnet. Now, more so when it's a normal Gaussian bell-shaped distribution later on in the day, less so now, but it's still on my radar screen as a target, Tom.
Right. And that target doesn't always just go there and stop. Sometimes we like to think of it as like, oh, it gets there and it overshoots a little bit. It might trade around. But I think the concept of trying to get back to point of control is an interesting one and really good with range bound trading, right? When we're trending and we're making new highs or lows, point of control somewhat, most times, not always, can be somewhat of a nice thing to know, but not helpful here. Although if that trend does end and we reverse, it's okay. Now let's see where that point of control is and see if the market can achieve it. Right now, we just went through it. We just went through it in the last 20 minutes. But that point of control could evolve. So we are seeing the volume filling in where there was low volume earlier. As we trade here with more volume, that volume might fill in. And if it stays at one place long enough or with enough trades, that point of control could shift, and it could shift the value area too.
Yeah, and the distribution is at the bottom part of the chart so far. As you pointed out, though, it could change, right? And so we're going to look for these other volume nodes. Here's a volume node up here as an example of 52.89.5, right? Where there's a little bit of interest up there. Go even further up, 52.91. So you can combine these two areas up here and say, okay, there's a little bit of potential up there, not as much as down here, but look at the chart. We're at that 62.5 harmonic. We're driving up, Tom. So I do expect some more volume to pop up here at prices above value.
Yeah, and just because that volume that happened at the beginning of the session, which generally is lighter, right? Don't discount what Jim pointed out with those competing points of control, because they were points of control before the opening range, before the U.S. started waking up, getting their coffee, and doing their pre-market trading. If the market decides, hey, that isn't a bad place, now you have two levels where there was more trading than other places during that time frame, and you could use those as targets. You could use them as stops, whatever you want.
Absolutely. Absolutely. So, there's a kind of a general textbook idea that the transition, or the event horizon, as I would call it, between the value area and prices above, or the value area and prices below, could be used as an actionable area of interest, right? So 52.84. So the idea is, hey, we start trading above that. Above, there's two different trains of thought. One is, let's go ahead then and get long, right? And then use that transition line as kind of areas for stop losses, right? Or if you were short, use this area, you'd put your stop in prices above, right? So it's kind of an area of interest that kind of similar to VWAP, right? Where it could trigger a trend direction, change. It could trigger a sentiment change.
And just remember, like most studies, because that are adaptive, this could change, right? So you might put in a target or a stop at the value area line that Jim pointed out, and as the market trades, that might shift. I think it's shifting now a little bit to reflect the new volume that's coming in.
Right, and you can see the volume, trumpet, if you will, just expanding and expanding and
Yep.
expanding. So right at that 62.5 harmonic though, Tom, and you talked me off the shelf of going short at the VWAP, and that was probably, thank you for that. Because you did have a series of, the trend was up, series of green, series of higher highs, series of higher lows, and here we are, marching up there, and that goes back to our overall bias, right? We've been in a bullish market in equities. It's still a bullish market in equities, and so, going short's a counter trend trade from that perspective.
Right. And you're oftentimes you're better served by going with the trend, right? Because if the trend's one way, you want to be with that, and that's how we stay afloat and come back the next day. But in it, that works for intraday too, knowing the daily trend, knowing the longer term trend, like Jim mentioned. Counter trend trades are tough.
Yeah, for sure. Trend is up right now. I'm not getting short even at the 62.5. We want to see some kind of area of resistance establish itself. So Tom, I want to kind of, should we get a little crazy? Let's do that.
Sure.
So let's say you wanted to see the order flow volume profile in a shorter time frame. Let's say you're interested in the opening range, which is, approximately here, or maybe pre-market. You could add, let me move this over here. You could add I hate to use the word inside order flow volume profile, but another one, right? Or
Right.
A more detailed one. And I'm just going to, oopsie, sorry about that. I'm just going to do that. Hang on a second. I have to make sure I have all my stuff straightened out here. And I'm going to right click, and I'm going to go to indicators right here on my dialog box. Oops. No, wait. No, my bad. Let's do it again. Right click. And I think I want to go to drawing tools, right? Drawing tools. It brings up another dialog box. I'm going to move over to where it says order flow volume profile on that dialog box. I'm going to select it. And then I have a pencil here that's been turned on, and I'll just pick my time frame. Let's just go 8:40 till now. And that'll put in another order flow volume profile. I don't know what you call it, shadow, footprint, histogram bars, whatever. And you'll see it'll look different, right? Because I'm only analyzing this time frame. Now, the point of control in this case is the exact same as the other, is the overall point of control. So that's one thing. But it's not as acute, right? We have a volume node down here and a volume node up here, and it gives us some more contemporary information.
Right, exactly. And like most drawing tools, I like to use them overall, like let's say entire session if I'm looking at intraday charts. But if there's a change, like every day we know 9:30 market opens up, we get new players in, right? You get a lot of volume in. It's perfectly fine to do that with order flow volume profile to see, okay, I know that maybe the point of control is up where the Asian session was or where the European session was, but I want to know now what it is uh, um, since pre-market, right? Because I know maybe it's not 9:30, maybe it's 7:45, or 7:30,
Yeah.
whatever it is.
Yeah, I had mine at 8:30 time. I can move it. I can make it tighter even just by clicking on it.
Right, exactly. It's probably not going to be much difference today because we kind of have been trading inside there, but when there's a change, it could be news, right? News could be a change. 8:30 news comes out. We know more about this picture. Let's start it at 8:30. Maybe it's 9:30 opening range. Whatever the situation is, when there's new ideas being expressed, certainly you can do a shorter term. It's just like a Fibonacci level, right? Fibonacci level, Fibonacci retracement tool. You could use the entire session or use an inside fib like Jim calls it. It's just meaning a shorter term when there's new ideas in the market, there's new expressions of what people think about the market. 2 o'clock on a Wednesday, random Wednesday every 6 weeks or 7 weeks, maybe 2:30, right? The Fed makes an announcement. Perfectly fine to do a Fibonacci retracement of that move, of that time period, of that a volume profile of that time period, because again, there's new information, and so people are reacting to that.
Right. And so, and Tom, you just, I heard the trigger inside fib. So I added the inside fib, and look at this. The point of control is right exactly in the middle.
Yeah.
It's almost the same price, right? It's exactly in the middle. It's right by the point of control, right by the 50% measurement between high to low based on the opening range and then beyond. 62.5 is prominently highlighted there. A nice area of support, by the way. 1, 2, 3 candles. And now we're trading up toward the top, generating a new price happiness level at 52.85 even. So now my trading range, Tom, for a short-term trade idea is right here. It's in the middle. It's tighter.
Right. And top of the value area, right? That's 37.5 retracement level. So, all sorts of things lining up here, but
yeah,
perfectly fine. And again, this is kind of what you think of the market, right? You could do the low of the day. You could do, or the low of the market that happened at 8 o'clock. That's a trend change. Why did it change? I don't know. I don't know all the information, but I do know it changed. So let's use the tools to say, well, at least maybe we can get some ideas about where things might go. Not, we don't always have to know why. It's good to know, but sometimes in the heat of the battle, right? Market starts moving. Why would be nice, but you don't have time to find out why sometimes. So let's use the tools to say where could this market go?
Yeah, absolutely. You could, and to edit this thing, guys, you just double click on it and it opens up a dialog box, and it's already highlighted here. And then you could go ahead and change whatever properties you like, including colors, right? Color for the profile, I have set it blue. You could change it to whatever you want. And really to kind of make it pop is where you go to the profile opacity. I have it set at 40. And then the value area opacity, I have it set at 80. And that shows the differential in shades of blue. That shows the differential shades of blue. If you want to put the volume actually in each histogram bar, show volume labels, you could just check that box all the way at the bottom. And it'll do that. Now, if the histogram bars are very, very small, it's going to be hard to see. Now, some folks also would say, well, I don't want to see a tick for tick volume profile. I want to see a whole point or 4 ticks, right? Remember, there's 4 ticks in a point. So you could just change that number, right? You could change it to a 4. Let's do it just to show you the difference. Because it'll be a bigger histogram bar. I'll hit the volume labels. We'll hit apply. We'll hit OK. And it's kind of cluttered. It's hard to see. But you could see now the histogram bars are taller because they represent 4 different ticks or a point. And we have the volume numbers within that actual histogram bar. So again, you want to do it in a way that you could see it pretty good. And hopefully you guys could see this okay. But it's very customizable, I think, is my point.
Yeah, it'll be a little blockier because you have more volume when you do 4 ticks versus 1, but it certainly jumps out at you, right? And if we're not looking for an exact value, a lot of times it's more about an area, and this is a good way to mark an area. Okay, it's a $1 area that we're going to look at. Look, it's right at S1. Really interesting.
Yeah, I know we're plowing ahead. We're plowing upward and onward, Tom, in this market. Trend is in play. And just to compare the size of the histogram bar with what we're seeing here on the trading ladder, remember, this is tick for tick, and these are 4 ticks together, right? So you can see that 4 ticks together. So if you go down to 52.80 and a half, where's that? Wow, that's way down here. 52.80 and a half. You could see that big volume node, right? And it's taking into account 4 of these and adding them up to get to 33,000.
Right.
All right. And if you guys want to just, highlight it, double click it, move it, adjust it, just click on it. I'm going to hit the delete button, and then we'll go back to where we started.
So Jim, what was the market we put a trade in? Was that crude? No, was it gold?
Well,
Am
I
I
will find my
misremembering?
control panel here. Here's my control panel. I got the orders tab open.
Okay.
I have gold, right? We have the stop. It's 21.73. We're trying to get long. It's 76, and we're going to go to that market. Seems like you're asking for a reason.
Well,
So
yeah, I just want to see if it's something we should continue with or abandon, kind of getting, a little bit old. We never got back to our retrace. We never retraced far enough to get our target. So, um, interesting that we're still outside of that value area, even though we're trading up here. Just shows you kind of the global nature of gold, right? So point of control way down at the bottom of the session, and that was during both the Asian and European session made that point of control. So we got to do a lot of work to bring that point of control up, that value area up. But I think this trade idea is dead in the water.
I agree with you too. And well, now that I agree, I'm canceling it. There's a bunch of different ways to cancel trades, but this is one of them. I'm going to click on the X of the target of the entry order. I'm going to do it again for the stop loss. So we have nothing working right now. And but we have this competing point of control right here, Tom. It's 7. When I say competing, folks, I mean we have the official one, which is color coded. Point of control is the most volume traded at any given price. It's color coded gold, 21.66.4. But we have a possible contender up here, 21.76.4. It's got a ways to go. It's got, I don't know, about 15% more to go, maybe, Tom.
Yeah, looks like it.
But it's a volume node, right? There's price happiness here as well. So that's another target for later on in the day. But right now, I think you're right. VWAP is starting to arc up pretty subtly, but the bands are really on the move, and the trading's happening between the second and first upper standard deviation band.
Yeah, so this is where trying to go long on a retracement, you might have to change your idea if you think, oh, the market's breaking out. Although, we broke out of the previous highs from the Asian session or maybe into the European session. Oh, that's still probably Asia at 10 o'clock last night. This might be that Jesse Livermore trade that Larry Williams talked about, right? Which it's making new highs of the session. Do we break out? Do we buy those new highs? Again, you run the risk, but you're buying strength, you're not buying weakness.
Right. And it's following the trend. And then it's also adding on to position. So let's just follow through. Now, this doesn't always work, guys, but it's a concept that Tom and Larry came up with last week.
We didn't come up with it.
I can't
I didn't come
credit.
up with it. Yeah, no, don't give me credit. Larry was talking about a Jesse Livermore trade. I'll give Larry credit, and then he can defer to Jesse.
All right. So the idea is every time you make new highs, you get long. So you get long. Or, we made new highs, you get long. We made new highs, so you add another unit. We made new highs, you had another unit. Made new highs, you had another unit. In that case, you'd be long 4 right now, right? You're doing the opposite of average cost averaging in. You're doing the opposite of that. Well, you are doing that, but you're doing it on the upside, right? So
Right.
now I'd have a 4 lot position up here. So we started making new highs somewhere, I don't know, up around 82. I'd buy another one. So that's that idea of layering on. I don't know how powerful it is on an intraday chart, Tom, because eventually we're going to kind of retrace back to a mean somehow, some way. But
yeah, exactly.
I like it. And then the volume profile here for gold, just to keep with our theme, it's not a Gaussian distribution. It's not a bell-shaped curve, right? We have, one volume node, 2 volume nodes, some minor volume nodes along the way, 3 volume nodes. So it's not clear and present what this market wants to do today. And we see that in a lot of markets. It's not really the greatest profile in the world. And so when I see this kind of things, when I see these kind of distributions, I'm looking at volume nodes as being more important than maybe the value area.
Right, right. Because it would take an awful lot for this market to get down to the actual point of control. Yeah. And even before that, we might make a new point of control. This market, the value area might shift up if we get back to where Jim's crosshairs are resting right now. If we trade back down there, we might make a new point of control. So, these adaptive studies, because they're not absolute, you just have to kind of pay a little more attention to them, pay closer attention to them to see, okay, I put this stop here at this value area, top or bottom, but it's no longer there. What does that mean? If you're sticking to it, you got to pay attention.
Absolutely. And by the way, TS Leon Gar, I'm sure I said that. I'm not pronouncing that right, TS, but thank you for being here. Are the commitment of traders indicators free? Yeah, they are. Just right click on the indicator tab, and they'll say COT. That's what the list is. So
Jim, I know you have a great guest coming up after the break.
I do. So we're going to take a break in a second here, but we have Craig Bewick coming to us live from the CME. Craig's here every Monday now talking about the CME markets of the week. We're going to talk about currencies. So let's take a real quick break and get Craig in here.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
All right, we are back with the CME Markets of the Week. Craig Bewick. Craig is the Senior Director, Client Development at the CME. Craig, good morning. How are you?
Morning, Jim. Good. How are you? How's the show going?
Pretty good. Pretty good. We're doing it. We had some great guests like you pop up. As a matter of fact, later on in the week, we have one of your alumni. Well, tomorrow we have Blue Putnam, and then an alumni of the CME. And then on Thursday, his replacement, who is now the chief economist, which is Eric Norland. So we appreciate you guys helping us out with these.
Those guys are awesome. I guess I'll just consider myself a little warm up for those guys because they're fun to listen to.
I've seen some great warm up bands in my time, Craig. So don't sell yourself short.
We all start somewhere.
But I know. So we've talked in the last few weeks in general about how great and I'll call them Forex futures, CME Group Forex futures markets are. They've been around a long period of time. Me and you have talked about them before. And, last week was like central bank week, right? With the Swiss and the Bank of England and the FOMC and several others either doing something or not doing something in the news.
Yeah, I think, the FX markets at CME, I think sometimes we don't give enough attention to on, you mentioned that I'm the senior director of CD&S, but really what that means, I work with the retail firms like Ninja, and we do a lot of education and promotion of futures and explain how futures work and things like that. And I feel like, a lot of individual traders, if you want to call it retail, trade equities and WTI. And sometimes I feel like we don't give enough attention to the very liquid. And like you said, I think the original financial future, right, at CME from, way back in the day. So there are very interesting markets. They impact a lot of other markets. So I'm glad that we're, spend a little time on that today. And like you said, I think it's a timely, it's a good time to talk about foreign currency, given kind of what's happening, not the least of which is the Bank of Japan last week moving their interest rate for the first time, I think, in 17 years, right?
Yep. And crazy. Yeah, but it was such a, we had Bobby Iacchino on last week talking about this, and he was like, yeah, they moved it, but it was like incremental. It was so small, nothing happened.
Yeah, it's interesting because it was obviously, and now, but I think the big deal is that it went from negative to not negative, right? For the first time in so long. They've been kind of the sort of poster child for negative interest rates, right, around the globe, and they went slightly positive. But you're right, and did you say Bobby Iacchino? Is that who you were talking? Is that who you just mentioned?
Yeah.
And in fact, you might have expected in some circumstances for the yen to rally off of that, right? Because now all of a sudden you've got an interest rate, but that's not what happened, right? And instead, the yen is still trading at near, I think, 5+ year. If it's not at 5+ year lows, it's right there at them. And Eric, who you just mentioned, actually put out an interesting piece last week, or an interesting opinion on it last week, and he suggested that while negative rates are meant to spur spending, right? That's why a bank might make their rates negative, is to get people to spend money. That in fact, negative rates can possibly act as a tax on banks, such that when you have now a rate that's not negative, it actually could serve to increase spending in Japan, which is kind of a contrarian way to look at it, but it makes some sense given kind of the price action that we saw in the yen on the heels of that rate hike.
Right, because if you have a negative interest rate, the conventional wisdom is don't keep money on your balance sheet, get it out there, loan it out, because it's costing you not to do that. So that's the traditional way to look at it. Now Eric's making the argument it's the opposite.
Yeah, and it's, in a lot of ways it makes some sense. And like I said, and then there's also, I think the idea that Japan said they were gonna, I think they said accommodative, right? So even though it's not negative anymore, I think they said they were going to be accommodative, was the words they used, for some time, which, we've had that carry trade, right, with the yen and dollar for so long, and maybe it's people are thinking that can continue now if the rates aren't going to keep going up. And if you want to just talk for 1 second about what the carry trade means.
Yeah. Go ahead. Explain it.
Yeah. So, I mean, essentially it's really just borrowing in a cheaper currency, a lower interest rate currency to invest in a higher. So essentially, let's say borrowing yen to invest in dollars, where we've got, a much higher interest rate than they have in Japan. And we've seen that, and it's been a kind of a long-standing trade. And maybe, people are looking at that to continue now. And maybe that's why, I don't, I'm not here to say exactly why, but, obviously we're seeing the yen didn't really rally against the dollar on the heels of that.
Yeah. And Dan did a good explanation of that at Graham's of last week when he's talking about the traditional yen Aussie dollar carry trade that was going on for a long period of time. But so I think the big surprise though was the Swiss franc, right? The Swiss franc, it's a major currency pair. It's not a minor currency pair. Swiss is in the middle of what you would think they would be in the European Union. They're not, right? They have their own currency, right? And even though they're in the middle of Western Europe, and they always have been, but they did that kind of surprise. We're cutting 25 basis points today, guys. Sorry, we didn't tell you ahead of time.
Yeah, and kind of we saw what happened after that.
Yeah, let's take a peek at it. Let's go to a Swiss franc daily chart really quickly, guys, if we can. I have one pulled up on the screen right here. Remember, this is Swiss versus the US dollar, and it's pretty much sell off, consolidation, sell off. I think we're having a little trouble getting that up on the screen right now. Sorry about that. But again, there we go. So we're talking 1.5%. This is the second lowest after the Japanese yen of any major country that I could think of.
Yeah, and it's just kind of a continuation of just dollar strength lately, right? It seems that even as we're the Fed talks about possibly 3 rate cuts, the dollar's really held up against really the whole basket of major currencies for the most part, right? With maybe the exception, and we were talking before the show, of the Mexican peso has been very strong. And again, I think one of the theories behind that is there's a carry trade going on there, but the other way, where the Mexican interest rates are really, really high. I think like 11%. And I heard at the end of your last segment, you were talking about commitment to traders. And when you look at the commitment to traders reports for currencies, you see for the Mexican peso, you see asset managers, basically the institutions, really long relative to the historical, really long the Mexican peso, which could be part of that as well.
Yeah, and that's another great currency pair we could trade with the CME, right?
Absolutely. And and actually, I hadn't realized it till I started prepping for this morning, but the volume in the Mexican pesos really kind of increased. And probably partly because of what I was just talking about, but it's a very, very liquid futures contract.
Well, I think as this phenomenon of nearshoring goes, right? You've heard of this nearshoring instead of offshoring, right? Where maybe manufacturing is brought closer to the border, Mexico, Canada. That hedge is going to be more important, right? For the nearshoring in Mexico. And when those hedges are more important, then the actual contract gets more volume, which makes it even a better trading proposition for guys like me.
Absolutely. And like I was saying at the onset, I think that's some of the interesting aspects of CME's foreign currency markets is there's so many different applications or use cases for FX, whether it's obligations for onshoring, labor, multinational companies, and then the implications on even like commodities, for example, right? Is we have so many commodities that are priced or denominated in dollars. So like WTI crude oil and gold, the strength of the dollars is going to be one element that impacts, the commodity trade, right? Because as the dollar gets stronger, well, quite naturally, you need less dollars than to purchase an ounce of gold or WTI, right? So, I think all of these things make FX trading a really interesting asset class at CME.
Oh, for sure. And, we've covered in great detail the benefits of regulated markets, counterparties, transparent marketplaces, it's endless, the list of benefits. Over the counter Forex has been, and I'm just going to put a trading ladder here. Over the counter Forex has been kind of like over the counter Bitcoin. Right? It's like it's always been a big marketplace, right? The cash over the counter, but it's been a segmented marketplace, right? Where all the dealers are making their own book, right? So you have dozens and dozens of books out there. Yeah, maybe they use an EBS feed that they tweak a little bit, but they're not tweaking it to the advantage of the trader, because they make their money taking the other side of the trade.
Yeah, and again, I'm not here to sort of say negative things about alternative markets and stuff like that, but I think you do bring up a very good point in that at CME, as with almost all, if not all of our futures and options markets, it's that central limit order book, what we call Globex, right? So if you're trading the euro currency, and whether you're trading, we can get into kind of the different currencies that we have available. Let's say if you're trading the euro currency, whether it's the standard or the big or the micro, it's that central limit order book. So there's a price in the market, and if you're the first one there, you get to, if you're the first one to the bid, you get to sell that bid. If you're the first one to the offer, you get to buy that offer. And it doesn't matter, if you're doing a 1 lot or 100 lot, if you're an individual or an institution, it's a transparent central limit order book, even level playing field. And then beyond that, I think you mentioned there's the clearing guarantee and, nearly 200 years of risk management at CME and all of that stuff. That's the same with all of our futures and options. So yeah, again, I'm not going to, say bad things about other markets, but you do get all of that at CME.
Yeah, my mom did tell me once, if you can't think of anything nice to say, don't say anything at all. But I don't know.
But yeah, it's a great point though, right? Because it's a level playing field, and and everyone's equal, and if you're the first one there, you're the first one there.
Yeah, no, for sure. And that's important.
The price is the price.
Right. It's FIFO, no requotes, no dealer getting in the middle, manipulating bid-ask spread, none of that stuff. So yeah, I am a super fan. And you talked about, so let's just talk about there's a major current, they call them majors and then not majors, right? So euro, yen are probably the two biggest ones, right? Then the British pound sterling, number 3.
Yep, that's exactly right. If you were to stack rank them by volume, you get the euro, the yen, the pound sterling, like you just said, then the Aussie, which you mentioned a second ago, and then CAD, the Canadian dollar, would sort of round out that G5, if you will, in terms of the major currencies. But just looking at the volume of kind of the standard products, that peso actually is going to come in next. So, I was mentioning before that we've seen really an uptick in volume, and that really kind of underscores that. It sits right there behind the Canadian dollar in terms of volume here. So it's been a big trade. But then we've got, all sorts of other currencies, and these aren't necessarily emerging, but you've got, they call it the Kiwi, right? The New Zealand, the Swiss franc that you mentioned. The maybe more of an emerging one, the next in terms of volume is actually the Brazilian real. And you might not have guessed that, right? But that's actually, that's a very, very liquid market at CME. So
I'm going to Brazil and later on in the spring. So should I hedge myself? Should I I gotta look at a chart, because I know I'm gonna have to convert some dollars.
Are you going for fun or for work?
For fun. I'm going to Sao Paulo for a wedding that I've been invited to. And the other thing my mom always told me, if someone's thinking enough of you to invite you to a party, you should go. So it's in Brazil. I'm going to go. It's going to be
I've actually
fun.
been, I'm kind of like the person on my team that's been supporting the retail individual efforts in Brazil for the last, bunch of years actually. So I've actually been to Sao Paulo 3-4 times. So
if there's something I could do as an ambassador to the CME group, and I can get a plane fare paid for, I will pretend I'm you, and I'll shave my head, whatever I have to do. and I'll get over there and represent CME Group.
All right, sounds good. We'll put our heads on it.
Anyway, all right. So a
but
lot
yeah,
of different
so-
currency. Yeah, go ahead.
Yeah, and then we talked about this last week with gold too, and CME has different sizes, right? Because last week, with gold, we were talking about the 100-ounce versus the 10-ounce, the standard versus the micro, and with currencies, and I don't think we should spend a lot of time on what we call the minis, but in a lot of these currencies, we actually have 3 different sizes, not just like a mini and a micro or a standard and a micro, but we've got a standard, a mini, and a micro. I think we should probably spend our time today more on just the standard and the micro. But we have micros available in the euro, the micro Aussie, the micro pound, the micro CAD, the micro Swiss, the micro yen. So in a lot of these different currency pairs, against the dollar anyway, we've got both a standard and a micro. And just to give you a sense of the difference, in something like the euro currency, the standard, or what we might call the big, is 125,000 euros. So if you do one contract in the euro, it's the equivalent of 125,000 euros worth of exposure, which means that every 0.0000, I believe 1 or 5, I'm not really sure 100%, but 5 decimals out. So one minimum tick is $6.25.
Yeah.
So if the euro moves by 0.00000, again, it's 1 or 5. That's a $6.25 move in your P&L. On the micro, the contract size is 1/10 that. So instead of 125,000 euros, it's 12,500 euros. But the minimum tick is actually double that of what the big is. So a one minimum tick move in the micro euro is $1.25. But that's a bigger move than you would see in the standard, if that makes sense. I'm not sure I was real clear on that, but maybe you could help me out, Jim.
Yeah. So in the euro, as an example, you're right. That last digit is a nickel, right? So when I quote it, I'm like 34 half, 34 even. I know I'm kind of lazy that way, but 345 would be the net change now. So it is a nickel on that one. And the notional value, like you said, it's a $125,000 contract. It's not a $100,000 contract.
Right. And they all have different, and this is just something you've got to get used to with futures, but they've all got different contract sizes such that, the euro is 125,000 euros. The yen, because of the value being so much smaller versus a dollar, is actually 12.5 million yen on the standard, and then 1/10 of that on the micro. The pound is 62,500. It's 100,000 Aussie and CAD. And then the peso, which we've talked about a little bit today, is 500,000 peso. But again, because of the value of the peso versus the dollar, even the big, which we don't have a micro on it, but the big is a $30,000 contract when you convert that into dollars. So it's a manageable contract for individual traders.
Totally makes sense. So that, yeah, again, the micros are friends. I mean, I always, as I was a commodity broker for 20 years, and, people would call to complain about overnight margins, maintenance margins, day trade margins, you name it. How do I get more leverage? How do I do it? Margins are your friends. Leverage is not necessarily your friend. You get plenty of buying power trading futures as it is. So you just be careful with what you wish for.
Yeah, again, I think you're comparing it to some of the leverage you can get in the over-the-counter markets and stuff like that versus the sort of capital efficient nature of futures, which, again, does force you to do risk management, but, hopefully in a responsible way. And that buying power that you suggest, that's applicable to whether you're trading the standard size or the micro, right? You're putting up, some fraction of that exposure we were talking. You're not putting up that whole $125,000 worth of, or euros essentially, right? It's some fraction of that.
Yeah. Yep. Absolutely.
And
By the way,
it's one of the things that makes futures powerful.
For sure. And Craig, I added the Mexican peso to my chart. I got to show it to you. We got to, if we can go back to the charts mission control real quickly here. So and I have it on my market analyzer also, and I noticed it has about 21,000 contracts traded so far, which is good, not great, but compared to the Swissy, it's good. But that's a tradable market. That's a decent marketplace.
Yeah, and I would try not to bring up on your show a market that wasn't necessarily viable. Let's say for an individual, something that was not as liquid or anything. But yeah, it's not it's obviously not trading what the euro currency is, and I hope I wasn't trying to suggest that. But at 20,000 today already at 10 o'clock Chicago time, to me that's generally going to be indicative of a viable market for an individual trader. Yeah. I think you're right.
And look at the order book. I mean, the order book's in the hundreds, right? It's not, 2s and 3s.
Right.
So that's all right. So you've opened my eyes. I'm going to be paying attention to this one as well as my Brazilian real, which I also added to my market analyzer. Talk about the symbols though, right? You have a 6 in front of currency pairs, right?
Yeah. And quite honestly, I don't know where, I'm sure that's some sort of legacy thing. I'm not sure where the 6 came from, but 6J for the yen and, 6A, I think is the Aussie and things like that. And that's just something, again, like the different contract sizes, something that you just have to learn. And it's not complicated, but it is just one of those nuances of futures where you do have to learn, what that symbol is. And once you do, it kind of becomes second nature, I think.
Right. And then, so if it's a micro then, but it'll have M6 mostly, right?
For the most part. And, we try to standardize that as much as we can, but in some cases it might be a little bit different, but generally speaking, yeah, like the 6E is going to be your Euro FX and the M6E is going to be your micro Euro FX. So, we try to make it easy. We know that there's some inherent it's just nuances with futures that you've got to kind of get used to. But once you are
the other nuance, I didn't know this. I'm embarrassed to say I didn't know this till recently. So the classic yen US dollar cross has yen in the numerator, US dollar in the denominator. That's why you get all those crazy decimal points. That's why it doesn't look like what's quoted on TV. But then when you get to your micro, I think your micro is the opposite, right?
Well, we just flipped it, and now you're going to put me on the spot here because I think we flipped it to match.
Let's find out.
Yeah, let me pull it up here.
So
I thought that was the one that we just moved to match the big one. Can you?
So I have the yen. I have an E-mini yen. Let's add that first. E-mini yen is the same. Let's go try to find the micro. I'm going to search. My guess is it's
it looks like the MJY. If you look at that,
I've got the M6J. It's coming in right now.
So do we have what? I think that might be it. We might have both. We might have the M6J, which is quoted the other way, and the MJY. Is that the case then?
Let's find out. Let's see if I subscribe to that data. MJY.
Yeah.
Yeah, I'm not getting that one. Sorry. Yeah, I'm not getting that. Oh, I'm sorry. 6. Say it again, Craig's. What's the symbol I'm looking for? Okay.
Well, the one that I've got up is micro yen over the dollar. So it's quoted just like the big. It's just not trading that much right now.
Right. Okay.
And that's MJY. We've, thanks for putting me on the spot, Jim. We have changed.
No, that's okay.
No, I know. We've changed the yen a little bit recently, and sometimes I just forget exactly what we've done, but you are right. And that's something to know. Like, you want to make sure, are you looking at like how many dollars it takes to buy a yen or how many yens it takes to buy a dollar? And obviously that's important, right? And then the big one, you're seeing that very small price because it's how many dollars does it take to buy a yen, right?
Right. And that's a good way to explain currency pairs, right? So if you go, it's
how because I'm not a currency trader. and it does get, with the inversions in some of them, it does get a little confusing. It's kind of how I think of it sometimes, just to get my head around it straight.
Yeah. So if I'm looking at the, I'm looking at the Brazilian real over the US dollar, right? And the last traded price is 0.20, right? So it's going to cost me 20 cents to buy one Brazilian dollar, I guess I'd call it.
Yeah. And that sounds about right from when I've been there.
Okay. All right. I'm going to save my quarters. I'm going to save my quarters and buy as many as I can.
But you've got the Mexican graph chart up still, right?
Yeah. Daily chart.
Just want to, like, the interesting thing to me is just the slope of that, relative to a lot of the other currencies against the dollar are going to kind of go the other way if you look at that. You know what I mean? So that's just kind of what I was pointing out before, the strength of the peso versus the dollar relative to the dollar strength against a lot of the other currencies. So just kind of another thing that makes it a little bit of an interesting trade.
Yep. There you go. All right. You sent me some vol charts. Actually, we're running out of time, but let's see if we can get to these. You sent me some.
Yeah, that one's just stop on that for a second. So this is CVol, and without going into the details, it's essentially CME's proprietary implied volatility index. So we could do a whole show on implied volatility, but it's basically the amount of movement that the options market is pricing into the future. And because we are running out of time, we'll sort of leave it at that. But as you can, and what we've done with this is we've taken that G5, so the euro, yen, Aussie, CAD, and I'm missing one.
Did you say Canadian? You said Aussie. You said pound, sterling.
Yeah, I missed the pound. So those five. So we've essentially taken an aggregate index of those five currencies, and we've looked at the implied volatility. As you can see, really, really low right now. And so the options market is and again, who knows? It doesn't mean it's going to not move a lot, but the options market is not pricing a ton of movement in the futures, into the market, right? And that's kind of what we mean by this chart. It's ticked up a little bit over the last couple of days, and it's hard to see it because this graph is 3 years long, but still you can see really, really low right now. So again, doesn't mean that it's going to stay like that, but that's what the options market is pricing in right now. I think maybe a more interesting one that I saw when I was kind of getting ready for this is a couple down. Keep going. That go up one.
Skew.
Yeah, just because
this one
of
is
that
interesting.
Move. Yeah. So essentially, another element in option pricing besides using implied volatility is something we call skew. The one definition of skew is the relative value of the calls versus the puts. So, in this case, using CVol, as that graph declines, is the line on that graph declines, it's indicating that the puts are being bid relative to the calls. So what you can see here, and again, this is that G5, so it's an aggregate index of those five currencies. And the options market has really kind of bid up the puts over the last week or so, as you can see by that pretty steep decline and then below zero. So anything above zero kind of means a call skew. The calls are trading relatively more than the puts, and then below zero, you're kind of looking at a put skew. So you've seen it go from a call skew to not a pronounced put skew, but relative to what it was, that's a pretty quick move. Now, again, doesn't mean the price is going to go down. Is the dollar going to rise against these currencies? No, right? But the options market is pricing downside risk in those five currencies relative to the dollar.
Yeah. Another great piece of information to develop your bias. Appreciate that, Craig. We're running up against time. Craig, appreciate you being here. Can't wait to see you again next Monday. And anybody who wants to reach out to Craig, shoot me an email, learn@ninjatrader.com. I'll get you guys together. Coming up next, Tom Schneider, Alex Cole. Be right back.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy, a starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit NinjaTrader.com to get started today.
Welcome back to NinjaTrader Live. This is the segment of the live stream where we will talk about technicals. Traders Workshop is what we've called it in the past. And today we're having back again as a guest, my friend and yours, founder of GoNoGo Charts, Alex Cole. How you doing, Alex?
Good morning, sir. Doing well, thanks. How are you?
I'm doing great. It's a beautiful day. We're still, I know probably where you are, where I am, it's still cold. We haven't hit that like nice spring weather yet, but it's almost there.
All the spring flowers are just coming out and now they're getting killed by the cold weather.
By the frost. Well, hopefully they're resilient and they can come back. So, you know, for those of you who are new to the live stream, Alex has been on the shows before. We had a show called Traders Workshop every Tuesday, and Alex has been on that show a number of times. But Alex, do you want to give a little bit of about what you do at GoNoGo Charts?
Absolutely. So, Tom, as you know, we worked in the institutional space for a while, and what we found was that everybody, traders, portfolio managers, anybody in the industry using technical analysis would try to create a really disciplined process, a checklist of tools they would look at to give the sort of the weight of the evidence approach and help them line the odds up in their favor. But what you end up doing then is create a complicated chart that becomes hard to look at and hard to understand or hard to explain to other people if you're, say, in sell-side research. So With GoNoGo charts, what we tried to do is do that in the background and then color code the chart so that we know exactly what we're looking at from a trend perspective. And that's that the price panel is going to color the bars as they go through their trend based on trend strength. And then we do the same thing for momentum, volume, volatility to give a complete technical picture.
Right. It's like a super chart, the way I look at it, right? It's a super chart because it takes all this information, condenses it into something that's easy to read. And of course, you can have your other charts, say the momentum aspects of trading. You could have another chart that has 5 or 6 momentum indicators if you want, but like you said, that gets cluttered. This might give you like the topical, hey, this is the overall analysis of the chart based on momentum, based on volatility. But you can look at that other chart that's really hard to look at, especially when you have a lot of them on your screen. But this simplifies everything. I always like this concept.
Thanks. Yeah, and what you can do with it is then use other concepts as well. You know, you might be a fan of traditional technicals like trend lines or you know, the understanding of the market dynamics underneath the chart, supply and demand, important levels of support and resistance, and that can still be seen because the price chart then is left relatively large, and we keep price as the focus. But like you said, hopefully it gives people. I I hesitate to call it a super chart, but I love that, and thank you very much. But yeah, we try to give people the full technical view in a way that's easy to understand.
And let's just remind everybody, GoNoGo is from a long bias, right? So think of like you said NASA or something like that. It's a GoNoGo for the market.
The idea of that pass fail. You know, if you're going to launch $1 billion into space, you want to know if the conditions are a go for launch. And so it's the same sort of idea with investing. If you're going to put some money to work, you want to know that the trend is in place, or that you're trading on the right side of the trend. So, you know, with a lot of markets, there's that long bias, but at the same time, it is an uptrend and a downtrend and a sideways trend finder. So you could be looking at these concepts, of course, for no-go trends, if that's what you're looking for as well.
Right, if you're short bias. So
yep.
Let's take a look. Right now, you have the E-mini S&P June contract, I believe, up. So maybe we could take a look at that and just kind of walk through the concepts in terms of today's chart.
Yeah, so I mean, it's been an incredibly strong market since the end of last year, right? We all know that. So there's no doubt that the trend is up, and we can see that we entered go market conditions over here in about November, and since then we've been stepping through the trend, making a series of higher highs and higher lows. What's important to us is to bring in the idea of weakness into a strong trend, so that you can prepare or be ready for any kind of changing conditions. So whenever you see the weaker aqua bars, Tom, and these corrections against the trend or consolidation sideways, that tells us that the trend is not as strong as it is when it's in these brighter blue bars. So we've got the weak form and the strong form of the go trend. Similarly, if you look back at the beginning of the chart, we had a no-go trend. These darker purple bars are the strong form, the weaker pink, as you see here, a counter trend correction, a rally against this no-go trend is painted pink bars, but still a no-go trend. And then any kind of amber bar, that's an uncertain flavor of the market, not enough happening behind the scenes to tell us we have a trend in either direction. We'll paint those amber, and those are our go fish bars. So strong trend is in place. More recently, of course, this past week, we made another higher high. We can see that we're painting strong blue bars. So right now, if I was to read this chart, I'd say strong go trend in place. And then if we turn our eye down here to the momentum indicator, this tells us that we have positive momentum. Right? We did the same thing, took the tools that are most commonly used from a momentum standpoint, blend them together. So instead of having, you've seen the charts, Tom, multiple panels, RSI, you know, stochastics, you name it, you can have 3 or 4 panels below the chart, makes the price smaller, makes it maybe leads to some sort of analysis paralysis. So what we wanted to do is the same thing for the lower panel, blend some of the most commonly looked at indicators to give us a sense of momentum. So we can say that right now we're in positive momentum, but we're no longer overbought. And we've been recently finding support at the zero line, which of course is important for us to continue to do that.
Right, and that zero line, think of it like a diffusion index or a positive negative. When we're above zero, it's kind of like, I won't say it's a go, but it's we're on the bullish side of things. And if we go negative, you're thinking, well, maybe we're more bearish. Not full bear, not full bull, but the farther away we get from that zero line, maybe the stronger that trend.
Yeah, and one of the things that was really important for us to create was the idea of using momentum in trend. So you've seen the research by Connie Brown and others where we know that if a strong trend is in place, momentum is likely to go overbought and then neutral, overbought and then neutral. Because it's not going to go up in a straight line, and every time the market comes back a little bit, that momentum is going to wane, and we're going to see neutral readings of momentum. But if we see oversold conditions in an uptrend, that's a concern, right? Because enthusiastic heavy selling is more of a concern than just waning momentum when we're in an uptrend. So what we wanted to do was put an objective level in here that could be used then as support in an uptrend, because there's a lot of work done to identify ranges in momentum. Where can we look for RSI to find support? Is it around 35, 40, depending on the market? But we wanted to make that completely objective. So when all of the inputs behind the oscillator are in their respective neutral territories, the oscillator will fall to the zero line and we'll look then for support. And we just recently had that. Let me turn on one of the other features of the chart, which can highlight that for us. And that's these icons. So whenever we get support found at the zero line, we're going to see these green circles telling us that we've got trend continuation. So we want to draw our eyes back to the price chart, but we know that something important has happened. Every time momentum has waned, we've continued to find support, and we can say then that we've got trend continuation conditions. So that's what we've tried to do then with the oscillator.
Very nice, very nice. And by the way, I do want to remind everybody that Traders Workshop traditionally has showcased NinjaTrader ecosystem vendors and partners, and Alex GoNoGo charts are on the ecosystem, so you can find them there if you're interested in seeing these on your NinjaTrader charts. Maybe we could take a look at this, because this is a daily chart, and we oftentimes, Alex, Jim, Mike, myself, we look at a longer term trend before we dive into the intraday. And so looking at this chart, it kind of confirms or reflects what we've thought about the E-mini S&P. We're still in a bull trend. It's not kind of a shocking step of analysis, but I think where this becomes really relevant is if we go into, let's say, a 10-minute chart to see what's happening today.
Yeah, and of course, we've been falling away from that recent high. You can see here on the daily, this red arrow tells us based on momentum readings, we've got a possible counter trend correction because momentum has waned. That's that situation where we've seen exhaustion here, overbought conditions falling back. So this red arrow tells us that over the short term, we may struggle to go higher. So no surprise that we've fallen for the last couple of days. And if you look at an intraday chart, you can see that actually we've been in a no-go trend for those few days. So what you might be then looking for is a strong move back into go colors, because we know that the larger time frame is a go. We've seen that on the daily chart. So perhaps we're looking to enter at an opportune moment. So we wait out this move lower, this sort of correction against the trend, and maybe now we're starting to hopefully paint some stronger blue bars. We see the oscillators above zero. We'll watch to make sure it finds support here. And if it does, maybe that would be an ideal opportunity to get in. Interesting to note that back here, we tried to go to a go trend, Tom, really early this morning, and we failed. And what we want to look at there is after momentum is positive, we see that weaker go bar. We want to look to see if we find support then at zero. If we'd have rallied back into positive territory, we would likely have seen go trend continuation, but we didn't. So this time, maybe a little bit more positive. We found some movements into positive territory on the oscillator, and now we are back in the stronger go bars and the oscillators at above zero. So we'll want to see this find support here, and perhaps then make new highs, and we'll be back into moving higher. So, that's how when we work with people in multi-time frame analysis, you set your bias perhaps from the larger time frame, and then you step down in trend like you mentioned. If you are long the market, you're looking for opportunities to find those sort of sensible positions or sensible moments to enter. And that allows you to trade in the direction of the trend, of course. So multi-time frame analysis is super important.
So Alex, one thing that draws, my eyes to your charts are those triangles.
Yep.
Are those times where you're overextended in one direction. In the case of the green triangles, you're overextended to the downside on the oscillator below, and you're coming back into neutral territory, let's say. Am I reading that correctly?
Yeah, absolutely. And I was working with a client the other day this is an equity trader, and we were looking at, I think it was SMH, and he was doing just that. He was looking to trim positions when overextended within a daily go trend. It was a strong go trend, and then looking to add to positions when we were oversold. So we drop down a time frame, and then we can find these opportunities. Like if you are wanting to add to positions because you're long, this may be a great entry because we're coming out of oversold conditions, and now the momentum is going back into its neutral territory. So these counter trend correction arrows on a shorter time frame, that goes. We will. I know because of where we've come from and how we met in our friendship. But you could be looking at something like the Elder triple threat system, right, where you set your time frames and then you drop down. Actually, and you'd be looking for oversold conditions on that third time frame to get in, because that might represent a low on your time frame that you're actually interested in. So working with somebody just the other day on exactly that, and that's what these triangles are pulling out for you: overbought levels, oversold levels. Just like imagine an RSI going above 70 or below 30, and then coming back out of those overbought levels. That gives you these icons. So exactly what you were referring to there.
What I notice about them, Alex, is when you get those overbought or oversold levels, let's focus on the oversold. There wasn't really a great big reaction when the GoNoGo coloring is darker, right? So you're in a downtrend, you've got these purple bars, deep purple bars, and the market kind of shrugs off. I mean, if they were paying attention to your indicators, they shrug off those reflections. But when we start to get into a weaker downtrend, it might have more impact, right? That momentum might have more impact, and they might be something that you might pay attention to more than, say, when it happens in a deeper color on the bars there, whether it's uptrend or downtrend.
Absolutely. Same thing happened here, darker no-go purple bars, and it wasn't until we saw it with some weakness in the trend that it then led to that sort of slightly larger pop. Tom, that's a great point, because we know that overbought or oversold conditions can happen in a strong trend repeatedly, right? And we know that there are people that buy overbought, because that's a sign of strength. There are people that, if you see something rising really quickly to an overbought condition, some people will buy that, because if that's the start of something new, that could be really strong. And then we also know that when we look for divergence, it's the same idea, and often it's multiple divergences you need. The first divergence in a strong trend may just be a small pullback right before the trend goes again. So I think that's a great way of looking at it. Looking at these areas of potential exhaustion when this trend is strong may just lead to some sideways bars for a couple of bars, or just sort of some slight slowing down. But when you see the weakness as well, as you pointed out, then that can often be a sign that now maybe there's some mean reversion, at least. Again, may not be a change in trend, but at least some sort of movement away in the other direction.
Do you mind taking a look at micro Bitcoin? Let's maybe on a daily standpoint, because
let me have if you could be so kind to give me the ticker.
Sure, it's MBT, micro Bitcoin, trades on the CME. And we have more data on that than the Nano in a daily standpoint. So that's why I'm showing you this, or asking you to pull that up. But micro Bitcoin, as we know, the story, very volatile this year. And big advancement. Of course, I would expect on a big trend up, we'd see that in the GoNoGo charts with the darker coloring. Curious, I just want to see where it is now, because we have had a little bit of a pullback. Interesting that you didn't mark that. Your indicators didn't mark that as a go fishing or no go weak or trunk. It really did stay in the up, the longer side of the trend.
Yeah, not on the daily. I mean, we've been looking at the Bitcoin chart itself, obviously a lot, but similar pattern. This looks a lot like the Bitcoin chart, of course. And what we've seen is this really strong move. We were talking to people about being over 70,000 on Bitcoin, and of course, then it happened. And as you said, mostly strong blue bars on the rise. Then we've got this weakness, as you rightly pointed out. These are the aqua bars. This is the weak form of the Go trend. And it comes after some counter trend correction icon here, this red arrow saying that momentum is waning, coming back into neutral territory. So that was no surprise. I think you're right. It hung on to those Go bars longer than perhaps some people expected. But that's, again, depending on your time frame and depending on your bias, this is a good thing, right? So when we've held on to this Go trend here and finding support at the zero line, now we're really looking for an entry to re-enter this Go trend if it takes off again. And so we've got a stronger Go bar at the moment and still finding support. And Tom, this grid is sort of the one piece we haven't talked about today, but when we look at the oscillator panel, I also wanted to put a sense of volatility in and looking for those areas of reduced volatility. When the price is moving sort of sideways, we see this climbing grid. We're seeing it again here, and that just means that the oscillators got stuck at zero, so very little directional momentum. Not a lot of, nobody's winning the fight, really. A tug of war, buyers aren't pulling it too high, sellers aren't bringing it too low. So we're seeing this momentum get stuck at zero, and that grid is starting to climb again. So the next movement out of this grid could be significant. So if you're looking for an opportunity, perhaps we're always talking about how people are always saying that, oh, I missed it already, right? What's the point of buying? I've missed it. But if we get trend continuation here, who knows, And so we're going to look closely at the zero line and see if it finds support, rallies back into positive territory. And then this would have just been a slightly higher low in this move in Bitcoin. Now, sorry to keep going, but if you were somebody that was looking to fade this rally, you drop down to a lower time frame and you're seeing a no-go, right? There's plenty of opportunities there over this last sort of 6-7 days, be perhaps taking no-go positions.
So, Alex, one thing, these indicators are dynamic, right? So we have an almost 9% move up on Bitcoin today. Yep. There is a possibility that momentum indicator down below, the oscillator, could pop up, right? I mean, if the market keeps going, you've got a darker blue, strong trend on the GoNoGo current bar because it's, reflecting the market price. If this market continues to trend up today, is it possible that oscillator could pop off the zero line?
Absolutely. So these indicators are updating based on price. So as price changes during the bar, that will affect what you're seeing on the chart. So yeah, we're in a strong blue Go bar now. If we continue to really rally, that oscillator could certainly pop up to a value of 1 or pop off the zero line. At the same time, don't suppose, or hopefully not if you're a Bitcoin bull, but if it was to reverse and move 10% the other direction, this blue bar could become aqua, right? It's going to be changing all the time based on the price that we're trading at. Once the bar closes, though, then we lock it in and it never repaints. Right. The calculations are based on the close of the bar, and that's much more useful than sort of allowing something to repaint based on new information, in my opinion. So we lock it in so we know exactly what the close of the bar dictated. But during the bar, as it's updating, yes, we could see the bar color change. We could see the oscillator move to a different value. All of that is updating as price changes.
Awesome. So could we take a look at the Russell, which is RTY? Russell sometimes does the opposite of what the other stock index futures do, as we know, right? Yeah. I'm sure maybe, like my kids, I have one kid that does the opposite of the other two, right? And maybe if you have more kids, you have something like that. But that's the Russell today. The Russell is up, everything else is down. But just want to take a look at it on a daily and then maybe a 10-minute chart.
Yeah, we're always talking, my wife and I, about we have 2 children and exactly the same upbringing, completely different personalities. So
right. Yeah.
How does that happen? So this is the daily, and what we're seeing here is that this is interesting because it's not as off to the races as perhaps what we've seen on the SPY, right? We're struggling with these prior highs in a way that we aren't on other indices. We've had this sort of period of choppiness and sideways movement. And what you can see is that sort of struggle to get away from the zero line. And we're seeing that again here. This is some real pull on both sides. We're looking for direction. And we thought we found it here a couple of days ago where we had go trend in place, strong bars, and a move back into positive territory. And that gives us trend continuation, just like we had here. So we've been seeing trend continuation, but now we're right back at the zero line again. So it'll be important to see if it holds and we get another green circle as we test these highs. But you can see, this is what I'm talking about, Tom, just from not overcomplicating the chart. You're able to sort of really quickly see that we're struggling with this prior high resistance, right?
Mhm.
You know, you draw a quick horizontal line over here, and you can see that we are struggling to break above horizontal resistance, and that's what we want. If we have multiple indicators on the chart, multiple panels below, our price panel shrinks to the point that maybe that doesn't pop off the chart as much. Now, again, if we imagine this horizontal line here, we imagine a sloping trend line here, we break higher, maybe we broke out of an ascending triangle. So we can do all of that traditional technical analysis because the price panel remains large. But at the moment, the weight of the evidence tells us we're in a go trend, bars are strong. And look, that's actually just proved your point, Tom. We just popped off the zero line to a value of 1, and we get that trend continuation icon. So as we were speaking there, this has changed from being at 0 to being at. And if you want us to pull it up on a 10-minute, let's see what that looks like. So there's that pop today on the 10-minute. Strong blue bars, already finding support at 0. This is a cool chart because one of the things we wanted to try to do was automate the process of technical analysis. And you could sort of look at this as, you know, a bull flag or a, you know, there's so many things you can call it, but basically we had a strong move higher. Now we're consolidating those gains, and basically we want to see support. And if we find support as we move sideways, and then we break higher, now we've got this pattern that a lot of people would call a bull flag. And so as we see these trend continuation icons, that would be an indication of perhaps setting up for a move higher out of this pattern. So, you know, that's the Russell.
Yeah, it's not a pretty chart, right? I mean, it's not traditionally wave-like in this one. The patterns, you know, but you know, that's interesting. You mentioned the pattern, the bull flag pattern, and sometimes those patterns exist when there isn't a wave-like pretty, what I like to call, you know, pretty looking chart. It's because it reflects breakouts, it reflects consolidation that might not be wave-like. But I like how, you know, it's interesting. Your red arrow at the top, I don't know what you call those, right there, like weak, I don't know if it's a weakness in the momentum or coming back into neutral territory, you know, followed by a trend continuation. You knew pretty quickly, like, well, maybe this reversal isn't going to happen.
Yeah. That's the way it would work if you think about it. If you've got a strong move and then you've got a lot of enthusiasm and a lot of buying, and then that sort of wanes as people can digest gains and the market consolidates, you're going to see, okay, well, momentum is waning. But then you quickly would then say, okay, well, having made that movement against this new trend, will the market pick it up and start buying again? So you're really going to look for those counter trend correction arrows and then those continuation circles. And as long as you see the continuation circle coming after, you know the trend is still in place, even though we had this waning momentum. And I think that the point that you make about this sort of not very pretty looking chart, that it's more of maybe a trader's market, right? When you're looking at these intraday charts, you're seeing some choppiness, especially pre-market. A lot of people will wait to see in which direction the market goes when it sort of opens. And we used to talk a lot about opening range, another great study that you could put on this chart because there's nothing else on the price panel. So once you see that movement out of the beginning of the day, that has perhaps more weight because it's sort of, you know, a more traditional way of looking at it.
Right. It's mixing what you know and new ways of looking at what you know with GoNoGo. Alex, I want to thank you for coming on. This half hour always goes really fast. But we'll see you again next week. How can people find you real quick?
Absolutely. Looking forward to next week, but also website, GoNoGoCharts.com, or send me an email, info@GoNoGoCharts.com.
Awesome. Thanks, Alex. We're going to take a quick break and we'll be right back with a wrap up.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Hello, everybody, and welcome to our midday wrap-up. I'm your host, Michael Burke. For this segment, I'm joined by my colleague and all-around technical analysis guru, Tom Snyder, CMT. Good morning, Tom.
Good morning, Mike. How you doing?
Dude, good. Doing really good.
Good.
The markets are somewhat muted today, major market indexes, but Bitcoin is really on a roll today. The micro contracts, I believe they rolled over the weekend. So they moved from March to April. And that roll came with a $3,000 gap on Sunday. And it was kind of quiet through Globex. And then we had another giant run up at the US Open today. So we're up, what are we up? We're up $5,575 right now. That's over about 8.75%. Pretty remarkable. What do you make of that?
Yeah, I didn't really tune into the micro Bitcoin news. I obviously fairly bullish. I'm looking at and Mike, I know we're going to start on your charts. Maybe we could bring those in, but I'm looking at support at a pretty interesting moving average there. Just kind of maybe the buyers are back for Bitcoin. You know, it's like you said, it's almost 9% move. The roll might have had something to do with it. Now I look at my charts a little differently because I do use technical analysis. I don't have that gap. So interesting, you know, to find out from you that there's a $3,000 Bitcoin gap. But that's also time premium, right? That's, you know, another month before this expires. You know, looking for places to buy, but you know, it could be a breakout trade. You run the risk. It isn't making new highs yet. So maybe we want to wait if we want to do a breakout trade.
So, you know, we were talking a little bit, the last time we were together that 20, I use a 21, you use a 20, that moving average is a good support level for a pullback. And that's what we saw here. We had the giant run up. We pulled back right to the 21 SMA. We were there for a little bit. On Friday, we dipped below that. And then today, yes, I think some of that gap up was the next contract was probably trading a little bit higher. And that market gapped up there. But, you know, I'm going to just flip this to the 5-minute real quick. And regardless of all of that, you can see that this was really a big move here in the micro Bitcoin contract. We were basically already near R2 when the US markets open, and then we had this big run up. The other thing I want to show here is you'll notice that I'm looking at a 5-minute micro Bitcoin contract. Notice how a lot of these bars are very immature. They really don't have any bodies. They really don't even have any volume at some of these prices. So that's a good indication, Tom, that there's no liquidity really in this contract over that Globex session. This is such a small contract too. If you were to put in a size of, even 5 or 10 contracts, you could sweep the level 2 and really get some heavy slippage on some of those trades.
Yeah, exactly. And that big move up, are we nearing R3? I can't really see right now. Your screen is really small on my screen. Are we nearing R3?
Not really. R3 is up here at 72,500. Although on a day like this, I guess it's within reach. We're up almost 6,000 points. So another 2,000 may not be that big a hill to climb for this market.
Mike, I'm having a little bit of an issue. My cam just went out, so I'm going to try and fix this. If maybe you can run with it for a couple minutes.
Yeah, no problem.
Great.
So let's take a look at the major market indexes. They are all pretty flat today. We'll just kind of run through them real quick. This is the ES coming up right now. So we are in negative territory, but not, we're down in the ES here 8 points. Take a look and notice that on Friday, we closed very near the low. That black line is the close. The red line is the low of Friday. We closed very near that throughout most of this Globex session, except at the very beginning on Sunday night. We were in positive territory, then kind of flat through the Asian session. We were negative into the European session, the little bit of a rally here as Europe opened. But after that, really pretty negative for most of the morning until US started opening up, traders started trading in the morning. And we saw a little bit of a dip here and almost an opposite. If you inverted a cup and handle, that's kind of what we have here. This is the upside down cup here. But the idea here is that at around 8 o'clock, market tried to rally a little bit, pretty flat. And again, there wasn't a real emphasis or news or anything driving this market. Very quiet news day today. And then again, we're keep in mind, we're below the low of yesterday. So this market's struggling. It's moving up a little bit, went through S1, could not get back to the low. And that's kind of where we are right now for all of these markets. This is NQ coming up. So NQ, a little more positive here than it was. It came down and tested S2 right during the opening range and then had a nice rally through the previous close. We're above the VWAP. That's the black kind of dashed line that you see. So this market is a little bit stronger, but we're still under yesterday's close. And again, now we're heading into the lunchtime hour. This is going to be quiet for a while. We'll see how this market picks up after lunch. And let's go to the Dow is down 100 right now. That's about 0.25%. You can see here, I've got too much data on the chart, so it's all scrunched up, but NinjaTrader tries to fit the data to your view. So if you have data going high or low in one way or the other, it's going to try to fit it. So here I'm just going to scroll back. Notice how that fits it automatically. So the Dow is, this is the Dow. It's been weak. It's down about 0.25%, well below yesterday's low, and the market is trending down here. We have a little bit of a turnaround here heading into lunch, but again, those three markets are slightly down. I don't want to give the impression that these markets are down a whole lot here. They look like they're down a whole lot because they're below yesterday's low, but in reality, they're all down really a fraction of a percent. And Tom, you're back.
I am sorry, just having a little bit of a problem with the new camera, but it seems we're back. Yeah, so that's the one thing about charts that get a little deceptive. You can have a big move, you can have a nice trending move, but you always want to look at the scale to see how big that move is, because you might put stops on or targets on based on what you see on the chart, but then you realize that's only a 4-tick stop or a 4-tick target, and that might not be what you want to do. So check your scale all the time.
Yeah, a lot of it has to do. Yeah, a lot of it has to do with how much data is in the chart.
Right.
So definitely it can be deceiving, and traders can fool themselves. I know I can by just not adjusting the chart the right way. The outlier here today, Tom, is the Russell.
Right.
So the Russell is up 15 points. That's 0.75%. And all of that move really came in the opening range, but we've been sideways since that. So you can see that the trading brought that point of control up there just above 2100, and that's where we are. So jumping right through 2100, I think is pretty bullish for this market. The trick is, can we close above 2100 today?
Yeah. So, what I'm looking at, Mike, is I'm looking at, that big move up, some consolidation, but I'm also looking at the cumulative delta. That's the order flow study that looks at the difference between how many trades happened at the offer, how many trades that happened at the bid. And in an up move, we would expect to have a lot more buyers coming in and showing that. And it happened, right? And by the way, it's a cumulative study. So it is a level that increases when we would expect it to increase when there's a big up move, which happened. But what's interesting to me is this market has been sideways since that up move. Pretty much, we see a nice distribution on the order flow, but this order flow cumulative delta has steadily been going down, and it's lower than it was before that big up move. So what does that tell me? That tells me there are sellers here. And the question is, which gives first? Does the price break down because there are more sellers and eventually that just forces the market down? Or do we see a quick turnaround in cumulative delta, buyers coming back in because the sellers can't move it down, and that might be a big move up? So I don't have an answer right now which way it's going to go. I can't say that, but cumulative delta can be helpful when you're looking at what's really happening kind of in between the trades, or in between the prices, if you will.
Yeah, I agree. I just added that. Super easy to add that to the chart. Just right click, and you have to be subscribed to the order flow tools in Ninja. Go to indicators, and they're all under order flow. This is where the VWAP is, the volume profile, and the cumulative delta. So you can add those into your chart. If you don't have those, you can contact tech support. They can give you more information on how to add those to the platform. Let's look at the daily really quick here, just to get a little deeper perspective. So, it's interesting. We're having a pretty good day today after a lousy day in the market on Friday for all the major market indexes. But we still have some separation here from that 20 SMA on the daily chart, which I think is bullish. But the thing that concerns me is we had a lower low today. So we have a lower low and a higher close. That is actually a key reversal pattern, but it's not occurring at the bottom of a downtrend. So I'm a little more leery of a key reversal happening that's not at a swing low. So even though that looks like a key reversal, at least on paper it's a key reversal, but that's really not a key reversal in my mind. That key reversal really needs to occur down here, like this bar here on the 19th. That's a real key reversal. We have a lower low, we have a higher close. That lower low is lower than many bars to the left. That's a real key reversal, and we saw that follow through on the next bar. So even though you're going to get these key reversals in lots of different places, it really needs to be at a deeper swing low.
I agree. Because otherwise it's just kind of noise in the trend you're in. That moving average, so interesting, Mike. I adjust my contracts, as we mentioned before. I adjust my markets for the roll. So what that means is if there's a gap, we fill that gap. We basically look at every contract in terms of today's contract's pricing. So we eliminate the gap, the natural gap, and we move the chart up or down for that contract. And we do it for every contract, right? So you have a continuous chart. We're on that 20-day moving average. I know we do slightly different with the moving averages. There's no gap. It's today's low is right at that 20. So it's interesting because the reason why I don't look at the gaps, but the reason why I adjust is for technical purposes only. You know, if you want to see, hey, you know, I remembered a month ago I placed a trade I bought at this price, or what price did I bought at the low, let's say you were lucky, and you say, oh, I don't remember paying that price. You can't look at my charts for actual pricing. You can look at Mike's charts for actual pricing, but you can't look at mine for actual pricing. So it's purely for technicals. We're right on that 20-day moving average.
Let's look at another market. Anything you want to look at, Tom?
I was looking at gold. Do we do gold when my cam was out?
No.
No. So gold's getting a little bit of a bid as well.
So you were talking about this earlier. You know, we have a bullish Harami here.
Yes.
It's an inside bar. Basically, Harami means inside. And again, it is fully, the high and low is fully engulfed in that body of Friday's candle.
Right. And you know, my assessment is it's bullish, but it's not as bullish as, let's say, a bullish engulfing, right?
Correct. So really, I agree with you. I think these inside bars are more of an indecision bar than anything else. Everyone's a little shocked that there was a big red candle prior. So there's buyers coming in. Maybe there's some profit taking. Maybe it's just, you know, hopeful thinking after the big down candle, whatever. And then you've got to wait for it to really break out to the upper downside of that red candle.
Exactly. And that kind of makes sense with where we are. We're kind of in a light news day. There aren't really a lot of big releases. It's a shortened week. It's kind of anticipatory. Whereas last week we know that Wednesday was going to be a big day, and you have a better chance for having those kind of candles. Now, it didn't happen here on gold, but there might have been some other markets that reacted to big news, and that's where you get your engulfing candles.
Yeah, so I mean, right now this market is, you know, in a channel anywhere from, let's say, 2200 to 2140. So we've been in that kind of mode for 3 weeks now. So this market really has to prove to us at this point that it wants to go in one direction or the other. It just feels to me, Tom, that 2200 is really a tough level to get through. I think, you know, there are lots of people who have gold who are thinking, I'd love to get 2200 for it. Right. Whether that's a miner or whether that's a guy with gold bars in his closet, you know, he's thinking 2200 is probably a good price for gold.
Right. It's a psychological level. And you know, we've been above it, right? We've traded above it, but we haven't stayed above it. We haven't closed above it. So if you're one of those lucky few that saw that number and said, hey, I'm going to get out of my position above this level, that's great. But we couldn't maintain. And, you know, that might be some downward pressure. Like you said, if enough people feel the same way, it's going to move the market.
I mean, if history is any indication, it took 2 months to get above 2100. So, you know, we're only 3 weeks into testing 2200. So I think we have a ways to go.
Yeah, it's still looking, I think, a little bullish overall, and you can't help feel bullish with that big move up from you know, below 2100, right? We were at, well, on a relative basis, on the adjusted basis, we were in the 2050s. We had just crossed above 2000. So you know, you can't help but feel bullish, but you know, volume's kind of waning on these markets. What is the next news event 6 weeks from now? You know, we might be stuck here for a little bit.
I totally agree. Let's take a look at crude oil. We have a few minutes left here. So crude oil kind of surprised me today. We've been down the last 3 sessions. And today, I couldn't see any news that was driving this. Crude is up. What is it? We're up, you know, $1.30. That's almost 1 3/4%.
Right, and I've got on my chart, I've got a couple of areas marked, which is basically 80 to 83. I've got 2 horizontal lines, 80 to 83, and the reason is, if on my adjusted chart, we go back to the end of the year, to the fourth quarter, October lows, December, early November lows, they were at that 80 level. and there was a lot of consolidation around 83 as well. So we're stuck in that 80 to 83 level now, but it could be temporary, right? It might not last that long. It didn't last long before. So, maybe we're trying to get up into that, trying to break out on that upside. There is an uptrend as well. And I've got a trend channel that's showing we're getting stopped at the top of that trend channel. We broke out of it last week. We came right back in. Maybe that's just testing, and we could see a bit of an up move in the next few days. But I won't say that that's going to happen. Right? Could hold as resistance.
Yeah, I agree. This is my 8-bar Keltner. We came up and tested that last week, and now we're back inside there. It's very similar to your trend channel, I think, as far as levels go in this uptrend. You can see that Keltner is upsloping all the way, going back all the way back into early, or into early January. So the trend is up here and slowly making progress to the upside.
Yep.
Let's see. The other thing I was going to look at is 10-year notes. So this is 10-year notes. We've been in a little bit of an uptrend during that FOMC. Everybody was a little positive coming out of that. Bonds were rallying, interest rates were falling. And but we have a couple of technical blocks here. One is we've got that 21 SMA. It acts as resistance here. We closed above it on Friday, but we're back below that now. The cloud is a bit of an issue. The other thing I wanted to talk about real quick, Tom, is that I use different numbers for my Ichimoku cloud on daily charts. So that indicator was really designed for weekly charts. And on the weekly charts, I use the standard, 2652 levels. But here on a daily chart, since it's a smaller time frame and I want to drill down a little bit more into those levels, I use a 8 and a 21 period for my Ichi one. So that 21 is a consistent number, like with our moving averages. So an 8, 21, and I use a 34 for the slow. So all Fibonacci numbers, that's not a coincidence. But it doesn't really matter what numbers you pick at the end of the day. It's just a matter of how you react to what those numbers are telling you in the chart.
Right. And that's exactly it. For the market you trade, for the markets you trade, for the time period you trade, you could probably find a way to optimize those levels, and they're yours. They're not the industry standard. Now, they could be the industry standard. Of course, there's that possibility. But that's the great thing I think about technical analysis is you can custom them, these indicators, to your needs and your markets and truly become yours.
So this today, pretty sharp down move in the notes here, and that spiked the 10-year yield. It's up almost 0.75%. We're at 4.25. So we want to really see what's interesting about that, Tom, is that interest rates are up, but the Russell is up as well. So there's a bit of a disconnect today, anyway, on the Russell. So does that mean that the Russell is stronger than we think it is? That it's bucking that trend to go down when interest rates rise?
Yeah, I mean, that's what it appears to be, right? Because generally Russell sensitive to interest rates rise, Russell falls. And that's just a general paraphrasing. However, it could also be a rotation. Maybe there's so much in the NASDAQ and the S&P 500 and even the Dow, and maybe the weakness, maybe there's more downside. So people are rotating into the Russell. That's a pretty big boost for kind of shatters that idea that the bonds or the notes and Russell are, pretty correlated in a positive direction. So yeah, maybe it is market thinking that the Russell is the safer place to be right now for some reason. I don't know what that would be though.
No, I agree. And I think the Russell has the biggest potential of being, has the highest potential of being really the outperformer this year against the other major markets.
Right. And with the Russell being in a kind of a sideways trend, more sideways than the others, maybe it's time. Maybe it's a timing thing, right? People want it. They've exhausted the move in the NASDAQ. They've exhausted the move in the E-mini, but look at the Russell. It's time to go into the Russell.
Yeah, that's my feeling as well. Well, we have some really good guests this week to talk about what drives these interest rates. Tomorrow, Blue Putnam will be on with Jim Cagnina on Let's Talk Futures. That'll be that's always a great discussion. And then Traders Workshop tomorrow, you have Anthony Drager. What's he going to talk about?
So he's going to be talking about support and resistance levels. And that'll be a really nice discussion. It's always fun when Anthony comes on and, kind of what drives them and what not to expect from them, like when they don't work, that kind of thing. So he's going to be talking about support and resistance levels. It'll be fun.
He's great. And you'll be back today for bars closing at 3:15?
I will. We'll wrap up. We'll kind of take a look at the day and see if there are any opportunities at the end of the day. Just because it's the end of the day, we don't want to, we can go to 5 o'clock, right? We're not going to, but you can go to 5 o'clock trading. There might be some opportunities left in the day. We'll explore those.
Absolutely. I want to remind everybody that that all of the ideas and all of the trading ideas and all the discussion here is really for educational purposes only and are not recommendations. We'd love to get your feedback here at Ninja for how we're doing. Any comments, suggestions on the shows, things you'd like to see, that is all welcome. You can send us an email at learn@ninjatrader.com. I want to just kind of hint at next week. We have a special promotion where we will be giving away some NinjaTrader swag if you can guess the close, that 4:15 CME official settlement close on Thursday, April 4th. So if that's something you'd like to participate in, tune in on Monday or Tuesday during our live stream, and we'll tell you how to enter that contest. So Tom, thanks for being with me today.
Yeah, thank you, Mike, and thanks for having me on and dealing with my camera issues. I think we figured it out. But we'll be back here at bars closing. Can't wait to see everybody there.
Thanks everybody for joining. Have a great rest of your afternoon. Good luck in your trading, and we'll see you at bars closing. Bye, everyone.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.